लीजिएगा, कोई इशू नहीं है, बट फॉर द टाइम बिंग भाई ये बोलकर आगे बढ़ते हैं। Now Kaplan has shared this with me, and this is called a revision of the entire syllabus, in which they have given 15 questions. First question on group accounting. The second part in the different IAS IFRS, and the third part is relating to reporting and ethical implications. In total 15 questions they have given. Okay. Whether we will be able to solve, discuss all these 15s, I don't know. I will try, but the chances are less, because एक question को discuss करने में it takes at least 1 hour. At least I am saying some of the question will be taking more than 1 hour, because there are different parts. So in that case, maybe we are going to do around 10 questions. Once the class is over, I will share this entire file with all of you. You can go through with the balance questions. But as I said, not that these questions are going to come. Nahi malum hai. Whatever we are doing in the class, that only you should do. No, leave the other questions, which we can do. I will try my level best to complete as much as possible. And those who are not doing the live classes, don't do recordings and anything of these. This is just a different set of questions for getting a better feeling. Okay. Now these are all SBR designed questions, but the questions are there on preparation of some calculations, short calculations and all that. मैं एक बार पहले वहीं से चालू कर रहा हूं, where the questions are mainly focusing on preparation of financial statement or something. Suppose we are starting with the third question. This is 5th question. I want to start with the third one because it will be more relevant for both of us. Both of us in the sense for IFRS and SBR student both. Harden and Solder. Harden acquired H holding company. H acquired 8 lakh of S $1 equity shares on 1st October 2010 for 2.5 million. H company acquired 8 lakh shares face value $1 on 1st October 2010 for $2.5 million. 1 year later, on 1st October 2011, H acquired 2 lakh $1 equity shares in Active for 8 lakh. This is another company. We acquired 2 lakh shares for $8 lakh. The statement of financial position of the 3 entities, Harden, then the other company Solder, and the third company Activa, for 30th September 2012 are given below. So we acquired 2 years back one company share, 1 year back another company share, and now after that the financial statement of the 3 companies are given. Figures are in thousands. Non-current assets, property, plant and equipment for all the 3 companies. Patents, in the last company it is not there. Investments in all the 3 companies by Harden. Actually all the 3, all the 2 Solder and Active, there is some other investment other than Solder and Active. Current assets, inventories of the 3 companies, receivables, bank balance, and the total assets of all the 3 companies. Equity and liabilities, share capital of all the 3 companies, $1 each, face value is $1. Share premium of all the 3 companies, retained earnings of all the 3 companies. Non-current liabilities, deferred tax, in the middle one it is not there. Current liabilities, trade payables, taxation and overdraft. So the total equity and liabilities, the liability side total. The following information is relevant. Before going for following information, if we read what is the requirement, prepare the consolidated statement of financial position of Harden as at 30th September 2012. Now normally in SBR exam, 25 marks question is not like this. They are not generally asking you to prepare PL account, balance sheet and all that. They are asking some adjustments relating to that. Goodwill calculation done, it is wrong, done, rectify it. NCI calculation done, wrong, done, rectify it. Rectify the figures, other adjustments and all that. That way they ask the questions. But as I am going into basic understanding. Then in that case, we will be going to that level of question. The first question in IFRS exam is this type only. That is consolidated statement of financial position for H. This is first question in IFRS exam that you need to prepare consolidated financial statement. This is consolidated statement of financial position, means balance sheet. Not only PL account. Even PL account details are not given also. Now what are the adjustments given? The following information is relevant. The balances of retained earnings of the three entities were for hard and shoulder Activa, 1st October and 1st October 2011. Which balances they are talking? The balances of retained earnings. The retained earnings of all the three companies 2 years back, 1 year back is given. At the date of its acquisition, the fair value of shoulder net assets were equal to their book value with the exception of a plot of land that had a fair value 2 lakh in excess of its book value. At the date of acquisition in shoulder, that means 2 years back, because the shares were acquired 2 years back. The net assets were equal to their book value with the exception of the plot of land that had a fair value 2 lakh in excess of its book value. The fair value of land was $2 lakh higher than the book value 2 years back when we acquired the shares in this subsidiary. Goodwill is accounted for using the full goodwill method. At the date of acquisition, the fair value of non-controlling interest was 6 lakh. The fair value of NCI given, so they are saying goodwill will be calculated based on fair value of NCI. On 26 September 2012, that is, they are talking about just 4 days before the year end. 30th September is year ending. H purchased an invoice of 50,000 in respect of an agreed allocation of central overhead expenses to shoulder. H processed, not purchased. H processed an invoice for 50,000 in respect of an agreed allocation of central overhead expenses to shoulder. At 30th September, shoulder had not accounted for this transaction. Prior to this, so shoulder subsidiary has not recorded this. Prior to this, the current account between the two entities had been agreed at shoulder owing 70,000 to Hayden, included in the trade payables and trade receivable respectively. The 70,000 is still included in trade payable and receivable. Prepare the consolidated statement of financial position. For those who are not giving exams, maybe they don't know anything relating to parent subsidiary. I'm not teaching very detailed, but giving some basic knowledge so that they come into picture. They will be able to be coming at same place. Those who are giving exams, they have studied. For them, maybe slightly 5-10 minutes will not be so interesting, slightly boring. But फिर भी करना तो पड़ेगा. First of all, if you ask me, if somebody has not studied anything up till now, anything means not properly, still they can easily pass the exam. Because group account 25 marks, they can easily score 10 to 15 marks without any knowledge. Because when we say statement of financial position means balance sheet. Balance sheet is a balance sheet only. It's a 3 companies balance sheet. Now it's a consolidated, combined balance sheet. So assets will remain asset, liability will remain liability. It's not that asset will become liability. That means when we prepare group accounts, we just need to add all the assets and liability. Or add करने के लिए there is no knowledge required. If you are in the exam hall, you can just add these figures, there is no problem. You just need to think about which figure you need to add, which you cannot add. Most of the figures you need to add, but what you cannot add. There are three types of investment any organization can do in other organization. I have around 30 company shares, Reliance, ITC, Hindustan, Unilever, so many companies at Tisco, then you can say, बहुत सारी कंपनियां हैं यार, सबका शेयर्स है, कितना है? किसी का 100 शेयर, किसी का 50 शेयर, किसी का 200, 300, 1000, 5000, ऐसे करके 30 कंपनीज का शेयर्स है मेरे पास. Those are all investments for me because by having those shares in those companies, I don't have any control over those companies, even though I am the shareholder, owner. But मेरा उन कंपनी के ऊपर कोई कंट्रोल नहीं है. Neither I am involving in their decision making nor going in their meeting. Even today, there is, what do you say, windmill company, Inox windmill. Inox windmill shares I purchased for 80 rupees. They are trading at 110 rupees. 30 रुपया ज्यादा है. कितना शेयर है मेरे को ध्यान नहीं है. कल से उनका 4 बार मैसेज आ गया है कि there is a shareholders meeting and it is online meeting. You need to vote. You can vote as online for the resolution which are going to pass. मैंने मेल पढ़ा भी नहीं, देखा भी नहीं. अगर मैं आपकी क्लास नहीं भी लेता तो भी मैं नहीं पढ़ने वाला था, बिकॉज मेरे को कोई वोटिंग नहीं करना है, मेरे को कोई बिजनेस डिसीजंस वहां नहीं लेना है. आई एम ए वेरी स्मॉल शेयर होल्डर, आई एम एन इन्वेस्टर देयर. बट मेरे पास मेरी सराफ एकेडमी, सराफ गुरुकुल प्राइवेट लिमिटेड का भी शेयर्स है. 50% विथ मी, 50% विथ माई वाइफ. सराफ गुरुकुल के अंदर वॉट एवर डिसीजंस आई एम गोइंग टू टेक, विच बिजनेस, विच प्रोडक्ट, मास्टर क्लास, दिस दैट, प्राइसिंग, हर चीज मैं डिसीजन ले रहा हूं. इन सराफ एकेडमी, सराफ गुरुकुल ऑल्सो आई एम द शेयर होल्डर. इन रिलायंस ऑल्सो आई एम द शेयर होल्डर. बट दोज आर टोटली टू डिफरेंट काइंड ऑफ इन्वेस्टमेंट. One is the investment. Reliance industry is an investment, not a business control, business decision. But Saraf Gurukul, Saraf Academy is not an investment. It's my business. It's my roji roti. It's my day-to-day affairs. It's my control. It's everything for me. Investment in Reliance is my passive income. पैसा लगा दिए, डिविडेंड मिलेगा, शेयर का दाम बढ़ेगा, कुछ करना नहीं है. पैसिव इनकम. But Saraf Gurukul, Saraf Academy is my active income. एक्टिव इनकम के लिए आपको काम करना होगा, आपको डिसीजन लेना होगा, रिस्क लेना होगा. लेकिन पैसिव इनकम के लिए देयर इज नथिंग लाइक दैट यू नीड टू डू. पैसिव इनकम आपके इन्वेस्टमेंट से अपने आप आएगी. आप बैंक में पैसा एफडी करोगे, इनकम मिलेगा. आप शेयर मार्केट में पैसे लगाओगे, आपको डिविडेंड या मिले. बोलेगा गिर भी सकता है दाम. मैं थोड़ी ना बोल रहा हूं कि इन्वेस्टमेंट के अंदर रिस्क इज नॉट देयर, रिस्क तो होएगा ही, बट दैट इज पैसिव इन्वेस्टमेंट. हर एक पर्सन को दोनों इनकम के बारे में सोचना चाहिए. पैसिव इनकम, आपके पास सरप्लस पैसे है, आपने गोल्ड में, प्रॉपर्टी में, आपने कोई कंपनी का शेयर में पैसे लगा दिए, आते रहेंगे. यू डोंट नीड टू थिंक अबाउट दिस. बट एक्टिव, आपके लिए एक्टिव इनकम, आप कहीं जॉब करते हैं, आपको ऑर्गेनाइजेशन को हैंडल करना है, अपना रिस्पॉन्सिबिलिटी पूरा करना है, दैट इज योर एक्टिव इनकम. सो माई इन्वेस्टमेंट इन सराफ एकेडमी, सराफ गुरुकुल इज एक्टिव इन्वेस्टमेंट. दैट इज माई बिजनेस. दैट इज ऑल्सो शेयर होल्डिंग ओनली. 50% with me, 50% with my wife. We are saying that even big companies, not only Prakash Saraf or Saraf Academy, big companies, Reliance, Ambani and all that, they are doing two types of investment. Active, passive. Now I am not talking about Ambani. Reliance Industries has invested in some other companies and they have purchased some other companies 70-80% shares. That means Reliance Industry is managing the business of the other company. This type of relationship we called in technical language parent subsidiary. For any other organization to be treated as a subsidiary, you need to have a control over the other organization. How you will get control? Normally by having good amount of shareholding, good amount of voting power. Normally we say that the greater than 50% voting power. How the voting power will come? By holding shares. Me and my wife in my Saraf Gurukul, Saraf Academy, the voting power is 50-50%. If there will be any shareholders meeting, directors meeting, me and my wife will be there. 2 shareholders, 2 directors. So if any company has on other company controlling voting power, then in that case they are called parent and subsidiary. The controlling will not be coming by shareholding only. In an organization, business is controlled by directors. In Reliance Industry, maybe there are 10 directors. So the business of the company is controlled by those 10 directors. And suppose any other company is controlling Reliance Industries out of 10, 6 to 8 directors. Controlling means what? The directors' removal from the company, the directors' reappointment, the directors are controlled by some other company. Maybe they don't have voting power as a shareholding, but they are controlling the directors, the maximum directors. Then in that case, we say that the parent-subsidiary relationship exists. The accounting or the legal language does not say that when you have shares on other company more than 50%, then only you can control the other company. It's not that case. Normally we assume if greater than 50% shares in other company, most probably we are controlling the other company, their business and every decision. But if maybe we have 55, 60% shares, still we may not be controlling their business. Because the balance 40% shares kiske paas hai, that is very important. If the balance 40% shares are with 1 or 2 persons, so in any meeting those 2 persons will also be coming. They are not allowing you to take any decisions what you want. So your control is not there. It is actually a joint control. Maybe in a company you have 40% shares, but the balance 60% shares are very scattered. Every person has 100, 200, 50 to 1000 shares. They are not going to come together. So even though you have 40% shares in other company, still you are able to exercise the control. And when you can exercise the control, it becomes your subsidiary company. In my case, my personal assets, Prakash Saraf personal assets liability, Saraf Academy assets liability is one. They are not separate. मैं कभी भी अपना बिजनेस में सराफ एकेडमी में ऑफिस में जाता हूं या कोई भी चीज मैं ये सोच रहा हूं कि सराफ एकेडमी का है या मेरा है, नहीं सोच रहा. आप भी नहीं सोच रहे. यू आर नॉट थिंकिंग लाइक दैट. भाई सराफ का है. Similarly, in bigger companies also, when the parent-subsidiary relationship is there, they are not separate. Legally, they are separate. They have separate entity, registration number, income tax return separate, सब अलग है. लेकिन दुनिया में हम लोग उनको अलग नहीं मानते. We consider them, they are one. They are together. They are one. For that reason, the accounting says that when there is a parent-subsidiary relationship is there, then we need to prepare group financial statement, group PL account, group statement of financial position. ग्रुप प्रकाश और सराफ एकेडमी, विदिशा, सराफ सब एक ही है. सब मिलाकर ग्रुप का क्या एसेट्स है. दिस इज द बेसिक कॉन्सेप्ट ऑफ कंसोलिडेशन. तो आज ग्रुप में वी कंसीडर दिस एस कंपनी हैविंग शेयर कैपिटल as 1000. These figures are in thousands. If you take 3 zeros, then it is 10 lakh. $1 share at 10 lakh. And the parent company is purchasing. Harden has purchased 8 lakh. 10 lakh में 8 lakh. You forget 3 zeros, it is 800. 1000 में से 800, 80%. While solving questions in exams. And in the practical life also. If the contrary situation exists, that's other thing. But more than 50% shares in other company. In practical life, in exams, we consider parent-subsidiary relationship there. The subsidiary business holder business will be controlled by Harden because 80% shares they have. But in the other company, that is Activa, 2 lakh shares. That is 200 I am taking. And here the equity share is 500. In 500, 200 is coming 40%. Normally in practical life, in exams, if the shareholding is less than 50%, we don't assume that the parent company, H company, control A. We don't assume. Unless and until question says that even though they have 40% shares, but they control the affairs of A Limited because they have the control over the board of directors of the company, that can be the case. Maybe they can see that the balance 60% shareholders are very scattered. They are never going to come together. So even though we have 40%, we will be able to decide whatever will be happening in the company, operational, financial, everything. Still it will become a subsidiary. But if nothing is given, I cannot assume illogical way. If it is less than 50%, it is not a control. It is not a subsidiary. But it is not my investment in Reliance Industry 300-400 shares. ये वैसा नहीं है. भाई 5 लाख में से 2 लाख शेयर है. 40% is a big amount. We see that H Limited will be affecting A Limited significantly. Not going to control, but they will significantly influence whatever decisions taken in A Limited. When the significant influence is there, then we say that relationship is called an associate. Whether it's a joint venture, whether it's an associate, both have same story in accounting. Joint venture means you have a control with some another person, joint control. Maybe you have 80, they have 20. Maybe you have 70, they have 30. But you don't have a control directly. आपको उनका भी बात मानना पड़ेगा. And associate means it's not a question of control. You don't have so much shareholding that you can get control, but you have handsome shareholding that will be giving significant influence over the other company. That generally we assume in the practical life in exam when the investment is 20 to 50%. Between 20 to 50%, it is assumed as associate. When we prepare group accounts, the treatment for associate will be different. The treatment for parent subsidiary will be different. Parent subsidiary means Prakash Saraf and Saraf Gurukul. It's one. So for Harden and Solder, everything need to add. Harden and Solder are separate company. But for a decision making purpose, for looking at the financials, they are one. So we will add everything. Harden, Solder, every assets, every liability. But not for the Activa. What we will be doing for Activa, we will discuss. But when we will add everything of parent and subsidiary, what will happen with the investment, this investment of 2,500, and what will happen with the subsidiary company, share capital, reserve, share premium, shareholders' money. When they have prepared the financial statement separately, parent separate, subsidiary separate, which is legal requirement also, then parent company is recording investment as an investment. But when you are saying parent and subsidiary are not separate, they are together, then this investment of 2,500 is actually giving control over non-current assets, control over every assets are controlled. तो आप ये लिखेंगे, माने you will not write this in the group accounts, but you will write this, My assets, my wife assets, my company assets are Saraf assets. But ये investment के बदले ही तो ये लिख रहे हैं ना. 2,500 के बदले we are writing 2,300, 420 and everything. And we will be writing all other liabilities, their liability as our liability, which is 450 and all that. Indirectly what I am saying. All the assets minus outside liability is called equity shareholders' money. When we are preparing group accounts, this subsidiary company shareholders' money, which is basically assets minus liability, which is called net assets. For this 3,400, parent company has given 2,500. For this 3,400 मैं गलत बोल रहा हूं, I think. Yes, 3,400. For this 3,400, parent company has given 2,500. Whether it is more or less, that's the secondary thing. When we prepare group accounts, we need to set off the investment by parent company with the subsidiary company net assets. आप अगर कोई assets खरीदते हो, please understand, if I am purchasing a computer and the computer value is 1 lakh, then I will pay for the computer 1 lakh. If I am purchasing a laptop, if I am purchasing a camera, if I am purchasing a television, I will pay for that asset. But if I am purchasing an entire business, then in the business there is land, building, plant, machinery, furniture, fixture, so many things are there. I need to pay for all of them. but that's not an asset, that's a business. And with the business, there is a goodwill, there is a brand, there is an image, there is a, so many things are there, technical know-how, so many. Whether those are there in their assets or not doesn't matter. मेरा बैलेंस शीट में ब्रांड, लोगो ये सब नहीं है, गुडविल नहीं है, लेकिन गुडविल है. That is self-generated goodwill. We don't have every assets recorded in the balance sheet. But if somebody is purchasing my entire business, then actually that person who is purchasing my business, they are paying for the assets values, but they are paying extra for the goodwill, for the brand, for something which is not there in the balance sheet. So we are saying that when 2,500 is paid to acquire a business, it's not an asset, to acquire a business, then we will follow business combination accounting. Business combination is explained in IFRS 3. Not only for parent subsidiary, maybe acquisition of a company. You are cancelling the legal existence, then also business combination. You are acquiring a business. When you acquire a business, definitely you need to pay more than the net assets. Whatever you are paying extra, that is treated as goodwill. So when we prepare group accounts, the one major thing we need to do the calculation of goodwill. How much consideration we paid, how much we should have paid, balance goodwill. So IFRS 10 says that, and IFRS 3 also. IFRS 10 says what is a control, voting rights, then directors control and all that. IFRS 3 says that how the accounting will be done. So IFRS 3 business combination says that when you are acquiring another business, not an asset, business, then you can give consideration in cash, you can give consideration in the form of assets, you can give consideration in the form of deferred consideration or contingent consideration. What is this? We are acquiring a business and we are giving cash. We are acquiring a business and we are giving our own shares. We are acquiring a business and we are giving our surplus, some property, some gold, silver, something, whatever we have. We are acquiring some business, we are saying them, we will pay something now, we will pay something 2 years later. That means we will not pay entire money now. Or we are saying to them that we will pay something later if the performance will be like this. If you pay later, that is deferred consideration. If you pay something, if better performance, then it's called a contingent consideration. Whatever you are paying for acquiring a business, you need to value it at fair value. Suppose I am acquiring a company in Saraf Academy. Saraf Academy में हम एक company acquire कर रहे हैं. And we are giving Saraf Academy share. The share capital in Saraf Academy, Prakash and Vidisha share face value 10 rupees. But our valuation of shares, so valuation will be done. It will not be coming 10 rupees. Whether I do asset-based valuation, whatever. So when I am acquiring other company, other business, and I am giving my own shares, it is not that into 10 is the value of shares. The fair value need to be calculated. If your company is listed and you are giving shares to other business, then the market price will be the value. But if your company is not listed, fair valuation need to be done. If I am giving my property to another company for acquiring their business, the property I purchase for 2 lakh. But when I am giving the property to that company, the fair value is 5 lakh. We will say the consideration given is 5 lakh, not 2 lakh. When we acquire a business, whatever consideration we are giving, we need to do the fair valuation of those consideration. Because then only you can say that how much you are paying extra. We need to do the fair valuation of the other company's assets acquired. If I am acquiring other company, holder acquires solder, holding acquires sold subsidiary, then whatever assets we are getting from subsidiary, land, building, plant, machinery, furniture, everything need to be fair valued. And if we are paying more than what the fair value of the assets, then we can say that we are paying for goodwill. Now when we acquire another company, in the other company there are so many intangible assets they have not recorded. Like in my balance sheet you will not find a logo or brand. कुछ नहीं है. लेकिन लोगो ब्रांड का वैल्यू है, कोका कोला है, कोई भी कंपनी है, मेरा चाहे नहीं हो. And independent valuer can value it by applying principal, assumption, presumption, whatever. then we are saying that all the assets of the subsidiary, whether they are in the balance sheet of the subsidiary or not, but they are identifiable, those all assets fair valuation need to be done. Fair value of consideration given compared with the fair value of all identifiable assets. And if the fair value of consideration given is greater than the fair value of assets acquired, then the extra value will be treated as goodwill. Because what is goodwill? Unidentifiable. Logo, brand, anything identifiable. Customer list. There are loyal customers of the company and they will be sold goods in the future. When we are acquiring other company, those customers can be sold our goods also. So that is also valuable. Independent valuer can do the valuation. That is identifiable. But goodwill, goodwill is hawa. Goodwill is nothing. IFRS 3 says that you need to do the fair valuation of consideration given, compare with the fair value of all the assets acquired, all identified assets, tangible, intangible, acquired. The extra consideration you are giving is treated as goodwill. If the consideration given is less, like on outset, I have not done the calculation, 3400 and we are giving 2500, we are giving less. So you are getting something of 3400 just at 2500. That means you are gaining. Why you are gaining? Because the other party wants to sell their assets as much as possible. They are distress selling. Sometime you want to sell some of your assets because you want money, you are in problem. Then that is called distress selling. So the other person who is buying, they are able to buy at a lesser price. Then that is called bargain purchase, bargain benefit. If the consideration given to acquire the assets are less, then it's a gain. If the consideration given to acquire assets are more, business acquire more, then in that case it's a goodwill. So the basic crux of consolidation is set off of investment with the net assets of the subsidiary company. For that all the workings are required. Maybe you are doing some silly mistake in those workings. फिर भी एग्जाम में पास होने से कोई रोक नहीं पाएगा. हजारों स्टूडेंट पास हुए हैं सालों में. इवन दो सब कंसोलिडेशन सब गलती करके आए हैं, फिर भी एग्जाम में पास हो गए. तो पास फेल का टेंशन ही नहीं है. आप केवल इतना सोच लें कि मेरे को पूरा पेपर करके आना है, गलत सही जो हो बस पास हो जाएंगे. मैं गलत बात नहीं बोल रहा हूं. आई एम नॉट एग्जैजरेटिंग दैट कि ऐसा है, सच में ऐसा ही है. वेदर इट्स एसबीआर, वेदर इट्स IFRS, बस पेपर पूरा करके आना है. वो तभी होगा जब आप मॉक पेपर इंस्टीट्यूट के प्लेटफॉर्म पे सॉल्व करोगे, नहीं तो नहीं होएगा. ये सिंपल बात है. आई मीन टू से दैट you need to do this adjustment, that set off of investment with the net assets acquired, difference goodwill or gain, that you need to calculate. वो हमें निकालना है. For this there are many adjustments given which need to be incorporated. The second thing, the parent company acquired shares of subsidiary on 1st October 2010. But presently we are standing on 30th September 2012. We need to calculate goodwill or we need to calculate gain on bargain purchase on 1st October when acquired. On 1st October 2010, the fair value of consideration given, the fair value of net assets acquired, that goodwill which we calculate on 1st October will be writing in the balance sheet on 30th September, because balance sheet is prepared on 30th September. In these 2 years, there may be the goodwill impairment. The subsidiary company is not doing good business. Their value has gone down. Their goodwill value has deteriorated maybe. We need to write the value of that goodwill which is still there now. We will calculate goodwill on 1st October, but we will be writing after 2 years the value which is still there. For that, in the question, impairment detail will be given. If given, we will incorporate, not ignore it. No impairment. But in practical life, every year, the goodwill which is calculated on 1st October, at the end of every year, we need to check whether subsidiary still command the same goodwill. If the goodwill is not there, the business of the subsidiary, sales, profit has gone down, they are not doing proper business, then in that case, the goodwill value need to be reduced, the goodwill value need to be deducted by the impairment loss. Practical life में करना होगा, exam के question में दिया रहेगा. Then comes, if there are any transactions between parent and subsidiary, my transaction with my wife, my transaction with my company, when I am preparing Prakash Saraf, Vidisha Saraf and Saraf Academy, they are separate. But when I am preparing group accounts, any transaction between each other is not a transaction. Any amount payable or receivable between each other is not a payable receivable. Because me and my wife, two individual. But for Saraf family, they are one. So मैंने कुछ भी मेरी वाइफ को बेचा, लिया, कुछ पैसा लेना देना बाकी है, वो सब यहां नहीं आएगा. वो सब स्टैंड अलोन सेपरेट में इंक्लूडेड है, हटाना है. I just need to record assets and liabilities which are with third party. Because you can't generate income by selling to yourself. You can't generate income by putting goods from one hand to another hand. If I am putting in my wife's hand, then also there is no income. Then there is no transaction. So that need to be eliminated whenever we are preparing group accounts. Anything which happens between the companies need to be eliminated. Any payable, receivable, any profit, loss which is recorded need to be eliminated. For associate which is Activa, we will record their investment as an investment only. 800 as 800 only. That means active. 13, 40, 60 we are not going because we are not controlling. If this computer, this laptop, this camera, this another computer, all are in my control. So they are Saraf Academy assets. Active assets are not in the control of the group. So for that reason they are not belonging to the group. So we are not recording subsidiary associate companies' assets and liabilities. We are recording that as an investment only, but not as a normal investment accounting. Why? Because our investment is 40%, which is very big, which is not like Prakash Saraf in Reliance Industry, 100, 200 shares, not that. 40% shares of the other company. So whatever active profit is there during the year, 40% belongs to Harden because Harden has 40% shares. Even though Activa is not giving any dividend and all that, let them, don't give. But their income 40% belongs to us because we are the 40% shareholder. So we will record our share of income in the books, in the PL account, share of profit, and in the investment we will add because the money is not received. It will be received later. So we will add the investment, increase the investment and add the income. This is called equity method of accounting. For investment in associate and joint venture, we need to follow equity method of accounting. Equity method says that your share of profit, you will record as an income and adjust with the investment value. Now there may be many transactions between Harden and Active, but we are not considering them as between each other. Vidisha, Prakash is one, but the associate and Harden is not one. So any transaction between them need not be eliminated. कुछ नहीं करना है उसका. Because Active is a separate company. That is not part of the group. It is an investment only. But if the Harden sold goods to Active or Active sold goods to Harden, anyone, the 40% of the profit belongs to Harden. So if Harden selling goods to Active, then Harden recorded income, but they are the shareholder in Active, 40%. So ultimately whatever is the income, 40% income is not we are getting. I am the owner of Saraf Academy and there is another company, another company in which I am having 40% shares. So Saraf Academy is selling goods to that company. Through Saraf Academy I am getting income, but since I am the shareholder in that other company 40%, so 40% of that income is not an income. So we are saying that relating to Active and Harden, any transactions, the 40% profit is not a realized gain. The 40% profit need to be eliminated. In case of hardened and solder, the entire profit is not a profit. You will say that hardened in the solder has 80% shares. 80% hai, but solder, every business, entire business controlled by hardened. We don't consider that 80% as relevant percentage. We need to eliminate the entire income because that profit is not realized. But in case of active, we will eliminate only 40% income. Later on, suppose active pays dividend. So when we receive dividend, we record dividend as an income in PL account. But hardened will not record dividend as an income in PL account. Because hardened has recorded his share of 40% profit, even though no dividend is given, already in the investment, already in the PL account. So when the actual dividend received, if you record as income, it will be double counting of income. So when the active will pay dividend, then hardened will deduct from the investment. They will not record it as a dividend income. For associate, we need to follow equity method of accounting, which says share of profit from associate we will record. If the associate actually give dividend, we will adjust from the investment value. It will not be treated as an income. These adjustments relating to associate generally will be given. Relating to subsidiary, these adjustments will not be given. That will be giving how to calculate goodwill and all that. And then you need to prepare, because in the questions, there will be some adjustment on IFRS 15, some adjustment on 37, some adjustment on 16, some adjustment, some different IS, IFRS will be there. अभी यहां पर ऐसा कुछ भी नहीं है. यहां पर एडजस्टमेंट बहुत सिंपल है. पहला वाला में आपको दे दिया कि सबका रिटेन्ड अर्निंग्स, दूसरे में दे दिया फेयर वैल्यूएशन ऑफ सब्सिडी लैंड, तीसरे में दे दिया कि एनसीआई वैल्यू, और चौथे में दे दिया देयर इज सम ट्रांजैक्शन बिटवीन देम व्हिच नीड टू बी एलिमिनेटेड. अदर देन IFRS 3, IFRS 10, देयर इज नो एडजस्टमेंट गिवन इन द क्वेश्चन, और कुछ नहीं है. जब इस टाइप का प्रॉब्लम एग्जाम में सॉल्व करना है, अभी तो मैं वैसे नहीं कर पाऊंगा, आप एग्जाम में क्वेश्चन में जाकर क्वेश्चन में आप इसको कॉपी करेंगे. You will do copy this, and then what you will do, आप जाके इसको एक्सेल में पेस्ट करेंगे. अभी ठीक से नहीं आएगा, ये आ गया, अच्छा ही है, गुड. What I have done, I have just copy pasted everything which was there in the question. In exams you will be doing this first. From the question you will copy in your Excel sheet everything. It will not be coming in a distorted manner. In the exam it will be coming very proper way. एकदम हूबहू वैसे ही आएगा. Then you will say here adjustments, and then you will say here final amount. The figures are still in 1000. We don't need to change the figures. उसके बाद आप क्या करोगे? When this is done, you start doing working note. Working note 1 we say as a group structure. It is not a compulsion. On working note 1 there is no marks in exam. But if you write working note 1, then in that case the chances are there that the sealing mistake will not arise. What is working note 1? Group structure. Group structure. Under group structure you just need to write H holds 80% of S for last 2 years and H holds 40% of A for last 1 year. It is just for my knowledge कि how long the shares are held. हाउ लॉन्ग द शेयर्स आर हेल्ड इन दीज कंपनीज, उस पर्पस के लिए मैंने केवल ये लिखा है. First of all, copy paste. Copy paste of the PL account or the balance sheet which is given in the question. Then making two columns. One is for doing plus minus this column, which is called adjustments, and that last is final column. Then start doing working. वर्किंग में जाइए. वर्किंग नोट 1 इज नॉट ए कंपल्सन. आपको अगर ध्यान रहेगा आप गड़बड़ नहीं करोगे, मत लिखिए. आई एम देयर इन द एग्जाम हॉल, मैं लिखूंगा कि 80% 2 साल से, 40% 1 साल से. नाउ वर्किंग नोट 2, नेट एसेट्स ऑफ एस एंड ए एक साथ ही बना देते हैं. आप बोलेगा ए का किस लिए? ए का इतना ज्यादा बनाने का जरूरत नहीं, बिकॉज दैट कैन बी डन इन अ शॉर्ट कैलकुलेशन. तो मैं एक बार ए नहीं बना रहा हूं, बिकॉज उतना दिमाग नहीं लगाना है. At, I will say on 1st October 2010, and this is on 30th September 2012. This is, they have given what is net assets. Net assets means subsidiary all the assets minus outside liability. The shortcut is subsidiary share capital and reserves. Why? Because I need to compare that with the consideration given so that I can find out goodwill or something. But for that I need to take net assets fair value. On 1st October fair value. For the time being in the balance sheet, the net assets given for subsidiary. Share capital 1000, it is on 30th September 2012. Share premium 500, 1900 retained earnings. For retained earning, they have given in the adjustment that the retained earning 2 years back was 1200. 2 years back was 1200, today it is 1900. Share capital, share premium given today, 2 years back not given. We will assume, presume, no assumption required. In 2 years, there is no change in the share capital, share premium of subsidiary. So 1500 is there 2 years back also. So I will say share capital on 1st October it was 1000, still it is 1000. Share premium on 1st October it was 500, still it is 500. Retained earnings, it was earlier 1200, now it is 1900. I can write all the assets minus liability. I will get share capital reserves only. Shortcut is share capital and reserves. But these are all book figure. I want the fair value of net assets, because then only I can say this much paid extra. For fair valuation only one adjustment. For fair valuation only one adjustment, that there is a land whose value is 2 lakh more. For fair valuation only one adjustment, there is a land whose 2 lakh value more. Fair valuation of land. Fair valuation of land 2 years back 200 more. Still today after 2 years it must be 200 more. If something else they need to say. But if something else I don't account for. Why? I am doing fair valuation to calculate goodwill. I am not bound to record fair value of every assets in the books, because I can follow cost model or revaluation model. So if the fair value on 30th September is greater, I am not bothered. But I need to be bothered because goodwill will be calculated based on fair value on the date of acquisition. This fair value will increase the assets value in the balance sheet. Assets value in the balance sheet. So here I am taking 39. Let's just write 200. Because whatever is the assets are there plus 200. I can delete this portion because this is not relevant for me. Why? Because it is associate. For associate, we are not going to record their assets and liability in the group accounts. For associate, I am deleting everything. I could have just taken only the 2 columns which are relevant, but I have taken this, so extra time lag gaya, but we don't require this. So this I have deleted. The 200. The 200 will increase the, you can say, reserves, revaluation reserve, and 200 will increase the assets value. So reserves increase is taken in the net assets and assets increase is taken in the balance sheet. On this 200 there should be depreciation, because the revaluation should have been done 2 years back. So 2-year depreciation. But this is a revaluation of land, and land is not a depreciable asset. If this would have been plant, machinery or anything, they would have given the detail, the depreciation rate or something. So I would be recording depreciation on 2 lakh. But depreciation will be coming after revaluation. So depreciation will be coming here only. Depreciation will be coming here only. But in this question it is not there. If it would be there, we would be recording the depreciation part. The first adjustments is about retained earning. The second adjustment is about the fair valuation of land. The third is talking about the NCI value 2 years back, 6 lakh. NCI means parent company has 80% shares. So subsidiary 20% each belongs to others. Those others are called non-controlling interest shareholders. Their fair value is given. If their fair value is not given, then whatever is the shareholder value, 20% is NCI value. These are all shareholders' value 2 years back. At that time, what was the NCI value? 20% of this. If you take the net assets value, then it is called proportion of net assets. But if the fair value is given, you are not taking proportion of net asset, then it is called fair value. For fair value of NCI, normal information in practical life in exam, number of shares of NCI multiplied by market price. If the subsidiary is listed in the stock exchange, if not listed, then the fair valuation need to be done. In exam, you don't need to do. That will be given, like in this question given. But in practical life, fair valuation of NCI need to be done. If cannot be done, then in that case, it is proportion of net assets. Whatever the net assets, 20% of that. Relating to working note 3, we will be doing working note 3, which is said as a goodwill. Is this essential that I will number second working net assets, third working? No problem. I can number any working any number. But if I am not able to do that, that means my practice is not there. मेरे को तो 2-3 सम लिख के करना है जिससे समझ में आ जाए कौन कौन सा वर्किंग क्या होएगा. Working note 4, which is relating to NCI. The NCI figure, NCI at 1st October 2010, NCI figure on 1st October 2010, that is they have given 6,600,000. NCI figure 600. That is done. Relating to this, just this adjustment is left, and relating to Activa, why they have given the figures. These two things are left. First of all, coming into this, before 4 days of the year end, 26th September, H processed an invoice for 50,000 in respect of an agreed allocation of central overhead expense. Parent company, holding company is giving services to subsidiary, and for that parent company raised an invoice for the services 50,000. The parent company raised an invoice for the services 50,000 relating to overhead allocation. The parent company is going to receive 50,000 from subsidiary for the invoice raised. At 30th September, S had not accounted for this. H raised the invoice, H recorded this, but subsidiary has not recorded this till 30th September. Prior to this, the current accounts between these two entities had been agreed at S owning 70,000. Without this transaction, without this 50,000, 70,000 payable receivable between each other. That is hidden receivable and subsidiary payable includes 70,000 payable receivable to each other. So this 70,000 will not be a receivable payable, because anything receivable by me from my wife is not receivable payable for Saraf. So 70,000 we need to deduct from receivable payable. But what we will be doing with this 50,000? Parent company recorded income 50,000. Parent company recorded 50,000 receivable from subsidiary. But subsidiary company has not recorded 50,000. The 26th September bill processed by parent, but the subsidiary company has not recorded this. So what we will be doing with this? Chandan or Harsa or Jinsan or Priyanka. Chandan, Harsa, Priyanka, और सुदीप्ता. इतना लोग. If these four will not say, then Surojit and Vaisali will say. Chandan, Harsa, Priyanka and Sudipta. Anyone. Eliminate means what? What needs to be done? Unmute yourself and say. I am talking about this 50,000. Yes, we can hear. Tell me.
So remove the cursor when I was going to speak by reading the line. Yeah.
Sorry.
That 50,000 is included in Hardin's statement. So that should be eliminated from the statement. It's a mutual transaction.
So 50,000 where you will eliminate? When you prepare balance sheet, where you will eliminate 50,000?
From retained earnings.
Reduce from income retained earnings. And this is one adjustment. What is the second adjustment? Because otherwise balance sheet will not tally.
Because the next one is mutual setup between trade payables and trade receivables of both the organizations. That's 70 something.
That's the simple. That you will reduce from receivable payable. But for 50,000 what?
50,000 one will be reduced from retained earnings and another will be reduced from
So Dishant Garg is saying that reduce from the trade receivable. Because the parent company has recorded 50,000 as receivable and parent company has recorded 50,000 as an income. So eliminate from receivable and eliminate from what I should say? Eliminate from retained earning. Can I say like this? Can we do? Ki we record in subsidiary company. We record in subsidiary company retained earning minus 50,000. because they have taken the service, then the income of subsidiary need to reduce by 50,000. And you can say that included in the payable of subsidiary 50,000. So ultimately payable receivable will reduce by 50,000. Further, we need to eliminate from receivable and retained earning of parent, or we need to incorporate in subsidiary retained earning 50,000 expense, and then we record in payable and then eliminate payable receivable. What should be the correct way?
I think first one, because the second one is very complicated. First include once and then reduce.
But then the first one is a wrong adjustment. Reason being that you understand that if there is a sale or purchase between parent and subsidiary, there are NCI. NCI is not concerned with that purchase and sale. We are eliminating unrealized profit. But we are eliminating unrealized profit from where? We are eliminating unrealized profit ultimately from the parent earnings. If I am the shareholder of Reliance Industry and Reliance Industry has sold goods to subsidiary or not, or I am the shareholder of subsidiary, which is a non-controlling interest, but the parent company is going to think parent and subsidiary are one together. But the non-controlling interest shareholders are not concerned with that. If you are eliminating from the parent company, then you are making the subsidiary earnings 50,000 higher, because you are not considering that expense. But if this service would not have been given by the parent company, then this service would be taken from somebody else. Then the subsidiary company would be incurring 50,000 expenditures. So the subsidiary income will be given to the shareholders, even to NCI, after deducting 50,000. But if you eliminate from the parent company, then the NCI share of profit will be higher, because you are not deducting from the subsidiary earnings. So what do you think? Whether it will be logical? Balance sheet mil jayega if you deduct from parent retained earning, and if you eliminate from receivable, balance sheet will tally, double adjustment. But if you consider in the subsidiary company retained earning deduction, and then you deduct from receivable, then also balance sheet will tally. From which earning you need to adjust, that's the question mark. According to me, adjustment should be done from subsidiary earning, not from the parent earnings. Because the subsidiary need to bear this cost, and the NCI share will be after deducting this 50,000. So if you deduct from parent retained earning and receivable, it's okay, balance sheet will tally. But if you deduct from subsidiary retained earning, reduce the NCI share, that will be much better. There is no extra efforts. You are deducting from earnings, from parent or from subsidiary, one adjustment. You are deducting from receivable, second adjustment. But whether you deduct from parent or you deduct from subsidiary, that's important part. The better adjustment is to deduct from subsidiary, not from parent. Because the subsidiary NCI should be getting after deducting 50,000. They should be getting share of income after deducting 50,000. Sudipta and others. Jinsan.
Because it was written that Harden has already booked and...
Maybe not written. But if I have done service for you, I will charge a consideration from you. So I am recording income, you need to record expense. Then only the NCI should be getting the sharing of income. Otherwise NCI will be getting 50,000 ka 20% extra. Think logically. Yes, Jinsan. But voice is not coming, Jinsan.
Sir, anyway, the year-end, the subsidiary has to record any transaction between the parent and as well as the subsidiary.
When we will prepare PL account, if we will be preparing, then in PL account we will eliminate from income, we will eliminate from expense. So ultimately net effect in the total PL is same. But when we are saying that, when we are preparing balance sheet, we need to understand NCI should be getting 50,000 ka 20% less. because this is an expense for subsidiary company. So if we deduct from the subsidiary retained earning, then in that case NCI will be getting 20% less of 50,000. That is a correct adjustment. What do you think?
Sorry, sir, but this is my internet got disconnected.
Yeah.
Okay.
So now you are getting कि कहीं से भी आप लेस करेंगे चलेगा, बैलेंस शीट मिलेगा, but you should be deducting from subsidiary retained earning because NCI should not be getting 50,000 का 20%. है ना? तो कहीं से भी लेस करे चलेगा, बट गलत थोड़ा सा गलत हो जाएगा, उसके लिए मार्क्स तो कटेगा फिर. So we are saying working note to service which is 50,000. Why I am writing here in the second column? Because this is arises not on 1st October 10. This is arises in the current year. Later story. Then the next adjustment from receivable, because parent company has included this in receivable. From receivable under current assets, receivable. Receivable minus 50 and receivable minus 70 also, which is already contra, because that is receivable between each other, and at the same time in the payables, current liability payables minus 70, not minus 50, because subsidiary company has not recorded it as payable. The minus 50 is already done in the retained earnings. If this would have already been accounted for by the subsidiary company, then we would deduct entire 120 from the balance sheet. But since this is not yet accounted for, so we are not deducting from payables, just only from receivable. Because anything payable, receivable between each other is not a payment or receipt for the group. So that need to be eliminated. Now we are left with only one adjustment, which is active 1st October. This we are not concerned because we acquired associate share 1 year back. At that time the retained earning was 800, and now 1 year later the retained earning is 1200. So in 1 year, how much profit generated by the associate? 800 to 1200, which is 400. In 1 year, associate generated income 800 to 1200, 400. In 400, our share of earnings, investments. Investment, I am writing here, investment in associate. Investment in associate. Investment in associate is 800. 800. I want to increase the font size. So that it is more legible. Increases the font size. So investment in associate. Slightly this one also I am adjusting. Investment in associates. So investment in associate, we are saying 800 and then plus. Plus is 1200.
Column C, column D black.
ठीक है, उसमें ले जाएंगे, कोई बात नहीं है भाई. Into 40%, because our investment is 40%. Whatever the post acquisition income, in that our share 40%. So that is coming 960. है ना? This you are saying here. ठीक है? So this deleted 960, and at the same time our share. Working note 5. Working note 5. Retained earnings. Working note 5, retained earning. First of all, H, balance on 30th September 2012. 30th September 2012. H balance is retained earning is 4500. 4500. And then add is post acquisition income. Post acquisition income, which we have calculated above 160. Post acquisition income 160. So that we don't forget. Otherwise we will forget. Now there is no more adjustments further. So we can say that we can close these workings. We can complete these workings, finish these workings. So relating to this, the total figure is 2900. 2900. And this one is 24, 34, 36, 3450. 3450, I think. If I am doing 15, 24, 34, 36 minus 50. Yes, you are correct. 3550. So this is coming 650. The difference is 650. Hai na? This is 2 years back. This is 2 years later in 2 year income. For goodwill, cost of investment, the parent company paid how much for? Here it we can see cost of investment. The cost of investment in the balance sheet is given. Associate 2500. The cost of investment is 2500. Cost of investment 2500. Cost of investment 2500. NCI they have given how much? NCI they have given 600. This is basically 80% money. And this is 20% money. So the total is 100% money. Less net assets at 1st October 2010. When we acquired the shares at that time, net assets, which is 2900. So 3100 is the 100% value, but the net assets value is 2900. So how much paid extra? 3100 minus 2900, 200. This is goodwill. This goodwill is 2 years back, but this is still now because there is no information given. The total 3100 consideration paid for 2900 assets, so goodwill is 200. If this 600 is not given, then we would be saying 2900 into 20% is NCI. Then the goodwill we will be getting, but the goodwill is only 80%. Because if the NCI you are valuing based on proportion of net assets, then you are not calculating goodwill for NCI. You are only calculating goodwill 80%, which is called partial goodwill method. In IFRS, partial goodwill method allowed if the NCI fair valuation cannot be done. But if NCI fair valuation is done, then the goodwill is always the full value of goodwill. There is no impairment, so that goodwill is still there. Then the NCI, then share in post acquisition. Share in post acquisition. Share in post acquisition is how much? 650 into 20%. because in the 2 year subsidiary company generated 650. 650 into 20%, 130. Why we are not taking the earlier one? This beginning figure 600 includes 1st October 2010 all the figures, the NCI value. This is 2 year further. So total becoming 730. The total NCI value 730. Here also share in post acquisition. Share in post acquisition. Share in post acquisition, that is 650 into 80%. 650 into 80%. 650 into kitna? 520. The 2 years profit divided between the shareholders. So this total is coming 5180. Total is coming 5180. Here this one is 200. This is goodwill. This is 650 already calculated. And then the net assets. Now other figures which we have not yet written. So property, plant and equipment 3980 plus 230 plus 200, which is coming 6480. 6480. Then 250 plus 420. 670. 670. I am not doing any adjustment for this. Nothing is said. Exam में आधा से ज़्यादा ऐसा ही होता है. This 2500 is gone. This is minus 2500. We are gone. In calculating goodwill, this minus 800 gone. Why gone? Because in writing investment in associate, this is other investment will remain other investment. This is coming 350. Other investment 350. Then this is coming 960 already done. In between we need to incorporate goodwill, where we will incorporate non-current assets. Insert one entire row. So I am writing goodwill. How much goodwill we calculated? 200. Goodwill we have calculated 200. This we are not concerned. Then comes inventory, which is coming 970. Inventory 970. Trade receivable. Trade receivable is coming 680. Trade receivable 680. Bank balance 150. So what is the total? The total is coming 10,460. The total is coming 10,460. 10,460. This is eliminated. $10,460. Under equity and liabilities, their share capital gone. Their share premium gone. Where gone? Where their share capital, premium, retained earning gone? Where? The subsidiary net assets is adjusted in calculating goodwill. The subsidiary net assets is adjusted in calculating goodwill. So they have been set off. Consolidation group accounting is a set off of investments against the net assets of subsidiary. Against this, how much we have calculated? What is the retained earning figure? 5180, NCI 730. ठीक है? 5180. This is gone. This is gone. This is gone. How much these through figures? 8180. 8180. And then we say NCI. NCI should be written under equity as a separate item. So what is the total figure? Insert entire row. So this is coming how much? 8910. 8910. This is the equity balance. The non-current liability deferred tax is 200. Nothing is given. Deferred tax is 200. Current liability trade payable is 1130. Taxation 140. Overdraft 80. So what is the figure coming? $10,460. The liability side total is coming 10,460. Liability side total is coming 10,460. And the asset side total must be that only 10,460. There is no adjustment in this question, but just as a basic adjustments, basic understanding of group accounting. Okay, when we are preparing group accounts, the parent and subsidiary are one. They are not separate. So all the assets and liabilities need to be combined. Just that the assets of the subsidiary need to be fair valued. And if there is any mutual adjustment between them need to be eliminated. Relating to associate, we need to follow equity method. The investment will remain investment, but the investment will be adjusted by the share in the post-acquisition income. Even though there is no dividend payment by associate, but still, because it is not any small investment, it will be treated as equity method and we need to record our share of income, post-acquisition income. If there is any impairment in the goodwill or investments, anything not given in this question, they need to be accounted for. But if nothing is given, we can't do on our own. And there will be some adjustments relating to some other IAS IFRS, which is not given here. That's other thing. So if those adjustments are given, then they need to be accounted for separately, but that is not a consolidation. Consolidation is this only. Group accounting is this only. Group accounting के अंदर यही आता है. Group accounting मतलब यही होता है. आपको अगर कोई और एडजस्टमेंट दिया जा रहा है वो दूसरे टॉपिक से रिलेटेड है, आप उसको गलत भी करेंगे तो भी आपको एग्जाम में ये नंबर तो मिलेगा ही. ये नंबर आप इजीली स्कोर कर सकते हैं. आपको 10-15 नंबर लाने में एग्जाम में कोई प्रॉब्लम नहीं होने वाली. बिकॉज मेनी ऑफ यू आर गेटिंग टेंस्ड कि मैं एग्जाम में पास होऊंगा कि नहीं. एग्जाम में पास तभी होंगे जब आपको बेसिक्स आता है. अच्छा नंबर केवल बेसिक्स से नहीं आएगा. फॉर गेटिंग गुड मार्क्स यू नीड टू हैव गुड अंडरस्टैंडिंग, बट फॉर पासिंग द एग्जाम नो हाई फाई अंडरस्टैंडिंग रिक्वायर्ड. बेसिक अंडरस्टैंडिंग से यू कैन इजिली पास द एग्जाम with a proper practice on platform and all that. जब मैंने अभी पूछा कि what will be the adjustment for service charge, maybe you are saying retained earning parent से लेस करेंगे तो भी नंबर मिल जाए. क्या प्रॉब्लम है? फेल थोड़ी ना आएंगे, लेकिन बोल ही नहीं पा रहे हैं. वी आर नॉट इन अ पोजिशन व्हाट टू डू, दिमाग में नहीं बैठ रहे. दैट मीन्स द प्रैक्टिस इज नॉट डन प्रॉपरली. अभी भी टाइम है, हो जाएगा, कोई इश्यू नहीं. आई वॉन्ट टू प्रोसीड फर्दर इन सम अनदर क्वेश्चन where some hi-fi adjustments are there. Not going to solve that, but we need to discuss some hi-fi adjustments relating to group accounting. क्या भाई? Should I proceed or anybody has anything to say? Should we proceed? फटाफट भाई, फटाफट. If anything to say, tell me. Otherwise, we want to proceed. Whatever I have written, I will share after the class. Don't worry. Huh? Whatever I am writing will be there with you. You can refer any time. But अभी मेरे को लिखते रहने दीजिए. I am adding this each. Yes, yes, sir. I am just making a rename. This is one number. Now I am saying no, this is
number 3.
yes, yes. Oh, sorry. ठीक है 2 लिख दे यार. This is 3 number ना. 3. This is suppose we are doing the 1 number. Okay. So this is we are doing the 1 number. E is a public listed entity that has a functional currency of dollar. It has a reporting date of 31st May 2016. So E is a public listed company. They have the functional currency dollar, all the transaction, purchase, sale, everything in dollar. And they have the reporting date 31st May 2016. E purchased 80% of ordinary share capital of B on 1st June 2015 for 50 million euros. 80% shares 1 year back for 50 million euros. When its net assets were fair value at 45 million euros. The net assets fair value was 45 million euro. The subsidiary company is Barris. We purchased 80% shares in foreign currency, the net assets fair value. The non-controlling interest was measured using the proportion of net assets basis. Now here NCI fair value not given. You will calculate NCI 45 into 20%. The net assets fair value they are saying. At 31st May 2016, it was established that goodwill was impaired by 3 million euros. At 31st May 2016, that is 1 year. In the previous question, no impairment. Here, goodwill impaired by 3 million. Additionally, at the date of acquisition, E had made an interest-free loan to B for 10 million. At the date of acquisition, 1 year back, E, parent company, made a loan, interest-free loan to B for 10 million. The loan is to be repaid on 31st May. So after 2 year loan will be repaid. An equivalent loan would normally carry an interest 6%, taking into account B's credit rating. If B's, that is subsidiary, would not have taken loan from the parent, taken from somewhere else, then the B would need to pay 6% interest rate on the loan. But since taken from parent, no interest. The exchange rates are as follows. On 1st June, when we acquire shares, on 31st May, when we are going to prepare financials, and for the entire year average rate. If the average rate is not given, 2 plus 2.5 divided by 2. If it is given, you use that only. Financial liabilities of G are normally measured at amortized cost. Financial liabilities of G are group matlab any company, they are recorded at amortized cost. At 1st June 2015, Elgin held 70% of voting rights in date. That means on June 15 already he had 70% shares of date. In date is another company, no information now, first time information given about date. In May 16, date issued new shares which were wholly subscribed for by the new investor. After the increase in capital, E retained an interest of 35%. Earlier they were 70%. Now they have only 35% because of new issue of shares by date. At the same time, the shareholder of date signed an agreement providing new governance rules, and there is a new agreement with the shareholder signed. Based on this new agreement, E was no longer to be represented on date's board or participation in its management. Based on this new arrangement, even though E had earlier 70% shares, now no longer to be represented on date's board. In the board, there will not be any board member of E or participate in management. They will not participate also. As a consequence, E considered that its decision not to subscribe to the issue of new shares was equivalent to a decision to disinvest. So now E is considering, since they have not purchased further shares, now they actually disposed of the shares in the company. E argued that decision not to invest clearly showed its new intention not to recover the investment in date principally through continuing use of assets. E argued that decision not to invest clearly showed its new intention not to recover the investment in date principally through continuing use of assets. So why they have not invested? That means they want to generate income by use of the assets. They want to generate income by dividend or maybe by selling the investment. That's the E's purpose. For that reason, they have not invested in further shares. Due to the fact that D constitute a separate line of business with separate cash flows, management and customers, E considered that the result of D for the period to 31st May should be presented based on principles provided by IFRS 5, non-current asset held for sale and discontinued operation. So the E company is thinking that now the D company's investment will be presented as IFRS 5. Now there are many requirements. Describe with suitable calculations how the goodwill arising on the acquisition of B will be dealt with in the consolidated financial statement for the year ended 31st May 2016. Describe with suitable calculations how the goodwill arising on the acquisition of B will be dealt with in the consolidated financial statement for the year ended 31st May 2016. Describe with suitable calculations how the loan to B should be treated in the separate financial statement of B. Discuss the correct accounting treatment of the investment in D in the consolidated financial statement for the year ended 31st May 2016. All three things, three question. One of the directors of E owns the whole of the share capital of the company, Blue, that buys goods from E. Transaction between E and Blue are at fair value. This is a new story given of 2 lines. Discuss the importance of the related party disclosures and outline the nature of any disclosure required in relation to the transaction between E and Blue. There is no question in exam of 35 marks. It is 30 marks. यहीं पर 1-2 नंबर कम हो जाएगा. But one by one focus करते हैं. First of all, it is asking about calculation of goodwill. Discuss with suitable calculation. Understand. Discuss. Describe with suitable calculation. If you are just doing the calculation and you are not describing anything, you will not be getting full 9 marks. Describe with suitable calculations how the goodwill arising on the acquisition of B will be dealt with in the consolidated financial statement for the year ended 31st May. एक बार suppose this is a foreign subsidiary, forget that these exchange rates and all that, भूल जाइए ये सब. एक बार मान लीजिए बस आपको इसका गुडविल निकालना है. कौन सा करेंसी में? द वे द फिगर्स आर गिवन. जैसे यूरो में दिया हुआ है आपको यूरो. यू आर नॉट कंसर्न वेदर इट इज डॉलर, वेदर इट इज यूरो, वेदर इट इज येन और वॉट एवर. इफ यू आर एन IFRS स्टूडेंट, you need to calculate goodwill. If you are an SBR student, then the foreign subsidiary goodwill need to be converted into year-end exchange rate and all that will come. So if I will say, suppose Chandanji, if you calculate goodwill from this data, then what will be the goodwill figure? Forget about exchange rate or anything. Chandanji. राहुल जी आप हो, आप बोलो यार। पूजा आप कैसे निकाले 14 मिलियन, थोड़ा बता दीजिए व्हाट यू डिड।
50 million investment
हाँ
plus 9 million NCI, that is 20% of 45 and minus 45, so it is coming 40.
यहां पर ये जो गुडविल निकाले आप सही बोले हैं, लेकिन ये गुडविल पार्शियल गुडविल है, दिस इज नॉट फुल गुडविल, बिकॉज यू आर नॉट टेकिंग एनसीआई फेयर वैल्यू बिकॉज क्वेश्चन डजंट गिव। अल्टीमेटली आपने 45 का 20% 9 ऐड किया और फिर पूरा 45 यू आर डिडक्टिंग, सो 20% इज बेसिकली प्लस माइनस कैंसिल्ड, यू आर एक्चुअली डूइंग 50 minus 80% of 45. 50 minus 80% of 45 is 14 only. When the NCI fair valuation is not done, cannot be done, then we are getting partial goodwill. But if the NCI fair valuation is done, then we get the full goodwill. In the previous question it was full goodwill, but this is only partial goodwill. Now, since it is a foreign subsidiary, we will calculate goodwill in the subsidiary currency, but then that goodwill we need to record in the group accounts in dollar, because our functional currency is dollar. So the goodwill which is calculated on 1st June, which you have just now said 14, every time whenever you calculate goodwill at the end of every year, you need to recalculate the goodwill value based on the new exchange rate. This is written in IAS 21, foreign currency transactions, in which foreign currency operations, that say that if there is a foreign subsidiary, then the goodwill will be calculated in the foreign currency, in the subsidiary currency, but at the end of every year, the goodwill need to be fair money, goodwill need to be valued based on the year-end exchange rate, and whatever the loss or gain because of the change in the exchange rate need to be calculated. That gain or loss will be divided between parent and NCI if goodwill full value method is used. But if the goodwill partial method is used, like in this case, then that gain or loss will be fully borne by parent company. Because since we are calculating goodwill only for parent, so the foreign exchange gain loss belongs to parent. The second thing, the IAS 21 says that this type of foreign exchange differences due to goodwill fair valuation, due to change in exchange rate, or other stories relating to net assets and profit for the year, whatever the changes are coming, they are called other comprehensive income. They are not a part of PL account. They are part of other comprehensive income. Those foreign exchange gain or loss because of the foreign exchange rate changes. Foreign exchange reserve comes under OCI. Under OCI, it is a part of reclassified to PL, because maybe after 5 years, 10 years, when we dispose of this subsidiary, then the balance left in the OCI will be transferred to PL account. So it is something which will be reclassified to PL account later. For the time being, it is not realized gain or loss. But later on, when the subsidiary disposed of, this will become realized gain or loss. Here, it will be beared money. It will be only a part of parent company, because we are not calculating full goodwill, because we are not able to calculate NCI fair value. So we will be doing the calculations purely in the parent company. So if we say that the opening goodwill is 14 million, that 14 million converted at $2, this portion which I am saying is only relevant for SBR, because foreign subsidiary is not there in case of IFRS. So 14 by 2 करना है कि into 2 करना है? 14 divided by 2 or 14 into 2?
Divided by 2.
Question is, you,
1 euro
How come you come to know this is €1 to $2?
Euro to dollar is written.
But euro to dollar means तो euros for $1 ऐसा बोलेंगे ना.
हाँ तो अगर डॉलर में कन्वर्ट करेंगे तो यूरो से तो डिवाइड करेंगे ना.
नहीं तो in that case आप एक बार euro dollar भूल जाइए. If I will say that $1 is 80 rupees, $1 is 80 rupees. You are converting 100 rupees into dollar. So what you will do? If $1 is 80 rupees and you are converting 100 rupees into dollar, then what you will do? क्या भाई? 100 rupees into 80 will be dollar. Dollar will be more than 100 rupees. सोच लीजिए. When it is dollar rate and if you are converting dollar into euro, then you will multiply. When it is dollar rate and you are converting dollar into euro, you will multiply. But when it is euro rate, money dollar rate, and you are converting euro into dollar, you need to divide. अब समझ लीजिए. हम लोग को पहले ये पकड़ना है यूरो टू डॉलर मींस इट इज $1 वैल्यू इन टर्म्स ऑफ यूरो और इट इज €1 वैल्यू इन टर्म्स ऑफ डॉलर. पहले तो ये कंफ्यूजन है. उसके बाद मान लीजिए पता चल भी जाए, देन प्रॉपरली इफ इट इज $1 each to euro and you convert dollar into euro, you will multiply. But if it is $1 each to euro and you are converting euro to dollar, then you will divide. This you will be able to understand $1. Forget about this. आपको ये देखने से समझ में नहीं आता है, आप इसको मत देखिए. If I am saying $1 is 80 rupees, so $2 is 2 into 80 rupees, $3 is 3 into 80 rupees. When I am saying $1 is 80 rupees and I am saying $5, 7, 8, whatever, you will multiply. But if I am saying 100 rupees, 200 rupees into dollar, then you will divide. Whatever is given for 1 unit, if that currency you are converting, then multiply. If other currency you are converting, then divide. So पहले तो मेरे को तो, I am not talking about you all, मेरे को तो ये समझ में नहीं आ रहा है यूरो टू डॉलर मीन्स €1 $2 or $1 is 2 euro. I'm not getting, believe me. The exchange rate are as follows. They should be writing euro to dollar, euro to $1 or €1 to $. क्या बोल रहे हैं ये लोग? लिखना चाहिए था यहाँ पर. The base currency is dollar or euro. I am not getting. Euro to dollar. Euro to dollar, it is very difficult to say. It is €1 to $2 or $1 is 2 euro.
I think it is euro to dollar. €1 is equal to $2, I think.
This is money. This type of question don't come in exam. Don't take tension. In the exam, it is written 1 unit is what? Whether it is €1 or whether it is $1, it will be written in the exam. If it is €1 to $2, then you will multiply. Because €1, $2, how many euro, how many dollar, then you are calculating on the top euro only. So you will multiply with 2. But if it is €1 to $2, pata nahi yaar. This is confusing. This way the question cannot be given in the exam. This is just somewhere printing done by Kaplan. They need to say whether it is $1 or €1. अभी आगे बढ़ते हैं. मान लीजिए हम लोग यही मान लेते हैं. Euro to dollar means it is basically €1 to $2. So we are saying 14 into 2. At the beginning, the goodwill value 14 into 2, $28. Then they have said that impairment 3. The impairment happened during the year. So 3 will be at the rate of 2.3. 3 will be at the rate of 2.3 average rate. Now the closing goodwill is 14 minus 3, 11 in euro. But the value of 11 in dollar is 11 into 2.5. So whatever the difference will come, that will be foreign exchange gain or loss. Whatever the difference will come, that will be foreign exchange gain or loss. मैं क्या बोल रहा हूं? I am saying, suppose this is euro exchange rate and this is dollar value. ठीक है? So I am saying that first of all, cost of investment. So cost of investment in euro is 50. Then comes NCI, which is 45 into 20%. 45 into 20% is 9. Then comes less net assets, which is 45. So we are saying better I am putting in the bracket 45. So we are getting goodwill. Goodwill we are getting 14. Now the exchange rate when we acquired the company, the exchange rate was 2. So the value in dollar is 28. Value in dollar is 28. Now there is impairment. Goodwill calculation is IFRS and SBR both. But this foreign exchange story is not the IFRS exam, because that is not there. We are assuming it is 1 euro equals to $2. I will check the answer. But that type it is confusing question. In the exam it should be written whether it is $1 or 1 euro. Not this type of question comes. Don't worry. You can check any question which came in exam. But अभी एक बार ये मान के चल रहे हैं, it is 1 euro is $2, है ना? 3 impairment. Impairment is at the rate of 2.3 average rate. So what is the value coming? 2.3 into 3. 6.9. 6.9. The closing figure 11, but the closing rate is how much? 2.5. 2.5. So 11 into 2.5 is how much? 27.5. So we say this one is coming 21.1. 21.1. So balancing figure, foreign exchange gain, but it has not taken 1 second. $21.1. So the foreign exchange gain is coming 21.1 to 27.5 is 6.4. 6.4. The foreign exchange difference is 6.4. The foreign exchange loss because of impairment in our own currency is 6.9. But then there is a foreign exchange gain because of the change in the exchange rate 2 to 2.3 to 2.5. The foreign exchange gain 6.4. But this impairment loss and this foreign exchange gain, both will be only for parent company. NCI will not bear that because we are not calculating full goodwill. We are calculating only partial goodwill which belongs to parent. So the impairment loss will be coming in the PL account, will be adjusted with the retained earnings of the parent company, And this 6.4 foreign exchange gain will be coming in the OCI, that is foreign exchange gain reclassified to PL account later, that under that heading, and then it is forming part of the parent company earnings only. It is not going to be distributed to NCI. That discussion you need to do, because they are saying that कि आपको डिस्कस भी करना है और कैलकुलेट भी करना है. Describe with suitable calculation how goodwill arising on the acquisition of B will be dealt with in the consolidated financial statement. Relating to discussion, what are the things we should discuss here? Because otherwise we will not be getting 9 marks. Maybe by doing this calculation, you are getting 4 to 5 marks. That depends upon marking guidelines. But if I want to score full 9 marks, what discussion I need to do? What description I should be giving? क्या भाई?
We should be explaining how we will treat the impairment in P&L and foreign exchange gain in the OCI, and it will only impact the parent company, not the NCI.
तो एक तो हम लोग को पहले बोलना है फॉरेन सब्सिडियरी. इसमें क्या बोलना है? इसमें ये बोलना है हम लोग को goodwill will be calculated in foreign subsidiary currency and every year blah blah blah, every year उसको कन्वर्ट करना है. दूसरा, goodwill can be calculated by partial method blah blah blah. ये खत्म नहीं हो रहा है, इनको लिखना है. फिर उसके बाद impairment loss only to PL and retained earnings of parent. फिर उसके बाद foreign exchange gain only to parent, part of OCI reclassified to PL. In balance sheet, it will be equity. It will be a part of equity. Under equity, you will be saying foreign fluctuation reserve. Under OCI, you will be writing under OCI write up करने के बाद balance sheet में it will be part of equity. आपको ये भी बोलना चाहिए while preparing consolidated PL, this will be part of parent shareholders total comprehensive earnings. जब हम लोग PL अकाउंट बनाते हैं तो इन द PL अकाउंट वी नीड टू बाइफरकेट द टोटल प्रॉफिट बिटवीन पेरेंट शेयरहोल्डर्स एंड NCI. So this 6.4 will be totally the part of parent shareholders total comprehensive income. Out of 6.4 nothing will be going to NCI. वो आपको बोलना होगा. अगर ये एक्सप्लेनेशन नहीं देंगे तो इनके ऊपर जो भी 3-4 नंबर बोला होगा वो नहीं मिलेगा. Maybe you are doing the calculation, you are finishing it, but the question is asking describe. इसको मैं लिखूंगा, आप लिखोगे, 1000 स्टूडेंट लिखेंगे, सबका इंग्लिश लैंग्वेज अलग है. इट्स नॉट अ क्वेश्चन दैट व्हाट दे हैव रिटन. वो लोग तो लिखा होएगा पूरा का पूरा IFRS का लैंग्वेज कॉपी पेस्ट करके, When the IFRS, you will go in IS 21, you go in IFRS 3, you go anywhere, जो लैंग्वेज लिखा है वही वो लोग लिख दिए, उनके पास वो खोलना अलाउड है. आप, you cannot write exactly the same language. You need to write in your own language the discussion part, the description part, why you are doing this, how you are doing this, why, what is the clause behind this. जब आप लिखेंगे तब आपको नंबर मिलेगा. So where in the model answers they have written, the wordings is not important. कि what wordings the institute is writing and what wordings you are writing is not important. आपको उसको लिखना है, आपको उसको समझाना है, so that you will be getting the full marks. Otherwise नंबर आपको पूरे नहीं मिलेंगे. मैं मॉडल आंसर भी देखूंगा आपके सामने ही. आगे बढ़ते हैं अभी. Describe with suitable calculation how the loan to Briar should be treated in the separate financial statement of Briars. They are not talking about consolidation. They are talking about how the loan to Briar should be treated in the financial statement of Briar. मतलब जो parent company ने subsidiary को loan दिया है, यहां लिखा है ना, additionally at the date of acquisition Elgin had made an interest-free loan of 10 million. The loan is to be repaid on 31st May. An equivalent loan would normally carry an interest rate 6%. यहां तक ये पार्ट. और भी कहीं पर लिखा था, financial liabilities of the groups are normally measured at amortized cost. बस ये 4 ही लाइन है और कुछ नहीं. और तो नीचे there is a date story. That's the third question. That's a different story. Relating to these 4 lines, they are asking, describe with suitable calculations how the loan to Briar should be treated in the separate financial statement of Briars. तो हम लोग को यहां पर जाना होगा फाइनेंशियल लाइबिलिटी, IAS 32, IFRS 9. When we say something as a financial liability, when we say something as a financial liability, कि दिस इज अ लाइबिलिटी, दिस इज एन इक्विटी, कब बोलते हैं, क्या डेफिनेशन है उसका? बस कॉन्ट्रैक्चुअल कैश फ्लो अंडर विच यू आर एबलाइज्ड टू मीट. कॉन्ट्रैक्चुअल वर्ड और थोड़ा सा ऑब्लाइज्ड, और उसके अलावा आपको अपना मसाला लगाना है. कॉन्ट्रैक्चुअल ऑब्लिगेशन टू ट्रांसफर कैश और एनी अदर एसेट. इफ यू राइट यू विल बी गेटिंग 1 मार्क्स. आपको लैंग्वेज बनाना है बट वो ध्यान होना चाहिए. फिर उसके बाद रिलेटिंग टू फाइनेंशियल लाइबिलिटी, व्हाट मेजरमेंट प्रिंसिपल वी फॉलो. फर्स्ट ऑफ ऑल, एज पर IAS 32, we classify the financial liability into how many categories? As per IAS 32, financial liability, how many categories we classify?
There are 3 ways, I remember. One is measured at amortized cost, another is measured through
Fair value through PL, fair value through OCI.
OCI.
For amortization, what is the condition? When you will classify it as financial liability following amortization principle? When? Held till maturity. No trading. Trading नहीं लिखना है प्रियंका. When you are taking a liability and you know that you will be holding it till maturity. Because if you hold for trading, then to FVI. But if maybe not trading, but you don't have the intention to hold it till maturity, then in that case you can follow fair value through OCI. So here it is decided that the financial liability, they are going to hold it till maturity. They will repay after 2 years only when they have taken the money. So in their standalone financial statements, they want to follow the amortization principle. As per amortization principle, IFRS 9 says that how we will get the value of the liability. How we will get the value of the liability. How we will measure. Because up till now, whatever I said is IAS 32. Now comes IFRS 9. The fair value of the liability initially to be recognized, That fair value is the amount raised minus the expenditure incurred to raise the amount. If I am taking loan from bank, say $1 million, but to take loan I incurred some expenditures. I paid some lawyer, some legal person, some fees or something. So what is the net amount I am getting in my pocket? That is the fair value of the liability. Then that fair value of the liability need to be compared with whatever will be our outflow in future, and we need to record based on amortization principle what is the rate of interest we are paying. The net amount we received compared with the outflows which we are going to make, the interest and the principal, and we calculate the effective rate of interest. Based on the effective rate of interest, we will be doing the calculations and we will be recording the liability. Amortization table, opening balance, interest, payment, closing balance, and so on. We are not concerned with the fair value changes later. Why the fair value of any liability change? Because of change in the interest rate in the market or anything. But we are not concerned under amortization principle with that. So here, if you want to record this financial liability now, then what is the value at which you will record? Based on the principles which we are discussing, what is the value of the liability you are going to record? We are getting from the parent company 10 million.
9.4.
You want to calculate present value of 10 million, है ना? At the rate of normal interest rate 6%. Even though there is no actual payment of interest, but we need to account for the interest and we need to record the present value today. At the normal interest rate in the market 6%. So 10 million divided by 1.06 divided by 1.06, 2 years back. 10 million divided by 1.06 divided by 1.06, 2 years back. How much?
8.8.
So that will be the liability value, but you are getting 10 million from parent. So you are getting cash 10 million, but you are recording liability present value. So what will be with the, do with the balance amount?
That is a chance to OCI.
Why OCI? What is the logic behind?
I was about to say PL, but it is amortized. There I got confused.
No. Suppose you have calculated present value of 8 point something. So on 8 point something, whatever interest will be there, that you will recording 2 years as an expense. First year interest you will record expense, then the total liability, then again second year interest you will record expense, then the total 10 and you will pay to the parent company 10 million. That is amortization. But अभी शुरू में आपको 10 के बदले जो 8 मिल रहा है उसका क्या करोगे आप? 10 के बदले 8 you will make 8 along with interest 10. बट अभी जो आपको 8 मिल रहा है 10 के बदले, माने 10 मिल रहा है 8 के बदले, अभी उसका क्या करोगे? अभी तो इनकम दिखाना ही पड़ेगा ना. Because there is no provision anywhere in IFRS that what you will do with this. आप ऐसा सोचिए, ये सामान आपको कम पैसे में मिल गया. The finance cost you will record this Disant later on after recording the liability now. The finance cost will be recorded every year when interest will be recorded. But अभी आपको 10 मिलियन मिल रहा है 8 point something के बदले, तो अभी तो सीधा सीधी इनकम है ना. You are obliged to pay something 8 point something, but you are getting 10. So आपको अभी फायदा हो रहा है. So that will be transferred to PL account. Suppose hypothetically I am saying 8.5. So you will say cash account debit 10, financial liability credit 8.5, credit profit and loss account 1.5. Later on for next 2 years, 8.5 pay first year interest debit, finance cost debit, credit financial liability. Then second year, again interest, finance cost debit, credit financial liability. And second year end, you will pay 10 million. That is a finance cost and the amortization. But अभी जो आपको पैसा वैसे मिल रहा है, आपको मिलना चाहिए 8.5, you are getting 10, वो तो अभी का इनकम है तुरंत. This income you are getting because of the relative nature. अभी relative वगैरह कुछ बोलना नहीं है, but ये इनकम हो रहा है क्योंकि relative है हमारा वो.
So this income.
I'm telling, I'm showing. Maybe you were not getting the journal entry properly. Cash debit. First of all, tell me the value. The cash debit is 10. Credit financial liability. Now tell me the value. 10 divided by 1.06 divided by 1.06. Okay? How much it is coming? 8.89. 8.89. So credit PL. Credit profit and loss account 1.1. This is when you are getting, there is no expenditure to raise the money. Now, first year end. First year end. Finance cost debit. 8.9 into 6%. 8.9 into 6%. How much? I am taking 8.89 as 8.9. So 8.9 into 6%. How much?
8.534.
थोड़ा ठीक से पॉइंट में आएगा ना. हाँ, 0.53. 0.53. Credit. Credit financial liability. One second. ठीक है, रहने दो यार. Credit 0.53. This is first year. Now second year. Second year again. Finance cost debit, which is what? 8.9 plus 0.53 into 6%. Because on the total balance, this should be such that it will be coming just equal to 10. 0.57. Credit financial liability 0.57. Credit financial liability 0.57. This finance cost will be transferred to PL account every year. Now at the end of second year, financial liability is 10. So financial liability debit 10 and credit cash 10. There is no balance left. In the 2 years you have recorded the finance cost, the liability figure comes to 10, you have paid 10. It's story finished. The finance cost for every year transferred to PL account. लेकिन ये जो शुरू में आपको जो बेसिक पैसा मिला, the amount which you are paying after 2 years, the value today is 8.89, but you are getting 10. So वो तो income उसी time पे जाएगा ना. So after this, at the end of second year, nothing is left. Jensen.
Oh, okay, sir. Okay, sir.
Okay, sir.
The effect is,
Yeah.
the net effect actually nullifies.
Because we have recorded interest so that it will become 10 in 2 years and we are paying 10 in 2 years. तो आपको यहां पर वो सब एक्सप्लेन करना है. IS 32, IFRS 9, amortization principle, cost minus expenditures, effective rate of interest. उसके बाद कैलकुलेशन दिखाना है. उसके बाद बोलना लास्ट 2 years में सेटल होएगा. इतना जर्नल करने का जरूरत नहीं है, बिकॉज दैट मच द एग्जामिनर अंडरस्टैंड. You will say that you will record 2 years finance cost and then at the end of 2 years you will meet the obligation. There is no fair valuation at the end of first year and second year, because in the amortization principle, no fair valuation done again. This is in standalone financial of the subsidiary company. If they are asking here, and in the group accounts how it will be accounted for, then what? They are asking group accounts also. This is, so they are asking for a standalone accounting of the subsidiary. But if they are asking for the group accounts also, then what? Voice is not coming, Jinsan.
Sir, it has to be taken off from the liability and the
Asset side. Because it is a mutual. Assets for parent, liability for subsidiary, not an asset and liability for the group accounts. So it is just 2-line answer. It is a mutual, it is payment and receipt, amount given and taken by parent and subsidiary. So that will not be accounted for. That need to be eliminated from the liability and the assets. In the parent company, it must be shown as an asset, non-current asset. In the subsidiary, it is recorded as a non-current liability, eliminated. Because it is a mutual set-off. For that reason, they are asking separate, because that becomes very simple. For that reason, for the group account, they are not asking this. Now discuss the correct accounting treatment of the investment in date in the consolidated financial statement for the year ended 31st May 2016. Relating to this entire paragraph. Earlier we had 70% shares. In the month of May, the subsidiary issued more shares in the market. We had not purchased any shares. Public has purchased. So our shareholding reduced to 35%. Now 70 to 35. So they are saying that shareholders of D decided when the shareholders of E is very less proportion, 35 only. The shareholders, after the new issue of shares, the shareholder agreement happened, and it is decided that E will not have any participation in the company, in the board, and E will not be taking part in the discussions and anything. E's importance finished from the company. E argued that the decision not to invest clearly showed its new intention not to recover. Even E also has not invested. Why? Because they don't want to do business through this. It's a passive investment now. Due to the fact that they constituted a separate line of business with separate cash flows and all that, E considered that the results of D should be presented based on IFRS 5, that is non-current assets held for sale and discontinued operation. So they are asking, discuss the correct accounting treatment of the investment in D in the consolidated statement of financial position. First of all, maybe not remembering the number of IFRS. Which IFRS is getting affected here? One is to IFRS 5, they have said. Is there any other IFRS is affected here? Maybe you don't remember the number. Number is not required in exam.
Yes, affected investment in associates, we can say that significant influence is not getting, it's losing significant influence.
That means IS 28. Any other IS relevant here? Other than IS 28, IFRS 5. Any other?
IFRS 9 financial instrument.
Yes. Because if you don't record it as an investment in associate, if you don't record it, then in that case, it will become a normal investment. For the normal investment, IFRS 9, financial assets, investment in securities of other company. और कोई IAS IFRS? Any other IAS IFRS, Pooja? According to me, IFRS 10, IFRS 3 भी. Because उसमें क्या लिखा हुआ है कि if you have control over one company and you are selling the investment and you are losing the control, then control to non-control wala bhi, which is explained in IFRS 3 and IFRS 10. Basically IFRS 3 business combination, the business is getting sold out. आप ऐसा भी थोड़ा बहुत बोल सकते हैं. If I will say, then the separate cash flow, management and customer, IFRS 5 जो उन्होंने बोला है कि when it will be treated as a sale of an asset or sale of a group. So IFRS 5 इन्होंने लिखा ही है, वो भी applicable है. These are the 3-4 IFRS applicable here. So first of all, suppose we want to apply the normal IFRS 3 business combination. यहां पर उसका क्या relevance है control to non-control? वैशाली जी क्या बोलेंगे हम लोग? As per IFRS 3 business combination, when then there is a change in the group structure, And when your parent company has control over subsidiary, but the control is lost, maybe by selling all the shares or maybe by selling partial shares and control is lost, then in that case gain or loss need to be calculated on the entire holding. गेन और लॉस पूरा का पूरा कैलकुलेट करना होगा. उसमें हम लोग करते क्या है कि वॉट एवर द नेट एसेट्स ऑफ द सब्सिडियरी, वॉट एवर द गुडविल ऑफ द सब्सिडियरी एंड वॉट एवर द एनसीआई, that all gone. Against that we are getting some consideration by selling, and against that without selling the other investment which is left fair value, we calculate gain or loss. Here we are saying that we are not selling the investment, हम लोग कोई सेल नहीं कर रहे, but now it will not be consolidated further because now there is no control. Since the control is not there, so earlier it was consolidated with the group, but now the debt investment will not be consolidated because the control is lost when the subsidiary company issue shares in the market. एक पैराग्राफ उसके ऊपर डालेंगे, बिकॉज गेन लॉस तो नहीं निकाल सकते, आपने बेचा नहीं है, लेकिन अब कंट्रोल नहीं है तो आपको ग्रुप अकाउंट्स में डेट को लेना नहीं है. अब आप IAS 28 में आइए कि we generally presume that if the investment is 20 to 50%, then in that case we have significant influence over the other company, and then in that case that other company is treated as associate, we record that by equity method in the group accounts. But here when the public issue is happening in date and our holding reduced from 70 to 35, even 35 is falling between 20 to 50, but still we don't have any representation in the board because the shareholder meeting did and the governance rule changes and we don't have any participation in anything. So we don't have any significant influence even by holding 35% shares. At the same time, we have decided that we are not going to realize income by doing their business. We have decided that we will be getting income by sale only. So for that reason, it is not an associate also, even though 35% shares are there. If we say that from the group account purpose, from the group accounting purpose, it is a subsidiary, have a separate assets, liability, income, expenses, separate group, and we want to dispose it, then in that case we can say it will be accounted for as IFRS 5 discontinued operation. The conditions for discontinued operation: the assets or the business is not going to be conducted, that is not going to give you income by business activity. The primary objective is to sell the asset, either piecemeal basis or in one single transaction. There is no changes required, there is nothing to be done to sell the asset. There is nothing to be done, it is available for sale in the present condition. The steps are taken and the procedures are followed to realize the money. The sale is highly probable within next 1 year. That we are actively looking, we are marketing at the proper price and the market price, so the sale is highly probable. We can't say that whether these conditions are fulfilled or not because that is not communicated to us. But then the chances are there by this sentence written that कि भाई हम लोग उसका बिजनेस करके पैसे नहीं कमाएंगे, हम लोग उसको सेल फेल करके ही पैसा लाने वाले हैं. So if the other conditions are fulfilled, we can say that it should be recorded as IFRS 5 in the PL account and balance sheet as a separate line item. In the PL account, below the profit for the year, that is the profit or loss from the subsidiary discontinued operation, and relating to the subsidiary, whatever the assets and liabilities are there, in the balance sheet they will be recorded under current assets, that is available for sale assets. Those assets which will be giving us money within 1 year. So they will be recorded under current assets. In standalone financial, they are not asking, I am just saying. In standalone financial, we need to classify this investment as per IFRS 9. Because as per IFRS 9, investment in securities of the other companies, there are two categories. There is no maturity. It is fair value through PL or fair value through OCI. Fair value through PL, the chances are less. We don't think so that we are doing trading in this much shares of any other company. So normally we can say that it will be classified as fair value through OCI. And the changes in the fair value will be recorded under OCI till the time it is not sold out. The changes in the fair value will be recorded under OCI till the time it is not sold out. The changes in the fair value, once it is sold out, the OCI figure will be transferred to retained earning or PL account. What do you say? Anybody remember? If you are classifying any investment as fair value through OCI, if you are classifying any investment as fair value through OCI, then in that case, the gain or loss in the fair valuation change is going to OCI. But later on, when the investment will be sold out, whether that OCI will be transferred to PL, थोड़ा सा कहानी है यहां पर वैशाली. There is some story here. I have bold that story in your notes. मैंने रेड करके आप लोग के नोट्स में रखा है. अभी आते हैं. 1 second. It is updating slightly late, sorry. Now it's updated.
Page 318.
Sure? Okay, let's. Okay. 318. Investment in shares. This fair value gain will not be reclassified to PL in future, just like IAS 16. In standalone financial, we can follow equity method for investment in shares of associate and joint venture. But for group accounting, equity method is must. जैसे हम लोग IAS 16 के अंदर पढ़ते हैं कि when we are doing the revaluation of an asset, the fair valuation gain going into OCI, that cannot be reclassified to PL. जब आप asset sell कर दोगे, then in that case you can transfer directly to retained earnings. Same thing is there in case of shares investment. लेकिन अगर आप PL fair value through PL कर रहे हैं, then in that case fair value through PL बात अलग है. लेकिन इसमें थोड़ा और भी स्टोरी था एक और. The fair value, the financial asset is measured at amortized cost. That is for debt. The objective of the business model within which the asset is held, that's a different story. Debt के अंदर there was a story कि when you can take to PL. Investment in debt के अंदर there is two stories. The fair value gain or loss balance will be transferred to PL account when the investment in debt is sold out. The fair value gain or loss balance will be transferred to PL account when the investment in debt is sold out. In case of debt, it is fair value through OCI. Then in that case, the OCI figure will be transferred to PL. But in case of equity investment, if it is fair value through OCI, and when the shares are sold out, then it will not be transferred to PL. It will be taken to retained earnings. So fair value gain of shares is items which cannot be reclassified to PL account. Vaisali. But in case of debt, it will be reclassified to PL. The gain or loss. Foreign currency, foreign subsidiary disposed of, it will be reclassified to PL. Derivative hedging, cash flow hedging, it will be reclassified to PL, effective portion.
So one thing, in both the cases, we are allowed to pay dividend out of it, whether it is a return earning or profit.
Not getting. Come again, sorry. Dividend, what you said?
In case of your aspiring to do return earnings, then also we are allowed to pay dividend from that. And in case we are transferring it to PNL, that PNL will definitely going to hit the return earnings. And from the
But there is a huge effect, sir. If you are taking to PL, you are saying in the PL account during the year there is an earning. But if you are taking directly in a statement of changes in equity from one column, that is retained earning, to to other reserve to retained earning, then the profit and loss account for the year is not getting affected. The return on capital employed, gross profit margin, operating profit margin are not getting affected. There is a huge effect, sir. Ultimately, profit is retained earning only. But not recording in PL account is a good, because otherwise there is no jamela, sir. Then why they have said that? You can reclassify, cannot reclassify. That's a very important thing, sir. But that's a very confusing thing also. There is no direct conclusion we can draw where they are saying that it can be reclassified, it cannot be reclassified. Maybe they are saying so many things, but it's a confusing area, sir. IFRS confusing area, I will say. You will say foreign subsidiary sold out, you can reclassify it to PL. Then why not in the other cases? I don't understand personally. Myself, I am under confusion कि कहीं पर करो, कहीं पर नहीं करो. तो आप लोग क्या होएगा? हम है यार, हम ही कंफ्यूजन में हैं. So we can say that in this area there is a huge explanation required for different IAS. Yes, sir. And the current year performance will affect your net profit margin, return on equity, return on capital employed, operating profit margin, all these things, na sir. But if you are not adjusting in the current year, then accumulated rate, then it is not affecting your those ratios. So for that reason, it has a different adjustment, sir. Okay. Then they are saying one of the directors of E owns the whole of the share capital of C company that buys goods from E. Transaction between E and B are at fair value. Discuss the importance of related party disclosures, outline the nature and all that. When we do income tax accounting, income tax, not accounting, tax return. In the tax return, we need to write whatever transaction we have done with relative. Maybe the definition of relative in income tax act is different. Maybe different. But हम लोग को लिखना पड़ता है. मान लीजिए आपने बोला कि आपने इनकम टैक्स रिटर्न नहीं फाइल किया. बात सुनिए, लिखना पड़ता है. If I am doing any transaction with my wife, with my son, with my daughter, with my any company, then in the income tax act of Prakash Saraf, all transactions with relatives need to be disclosed. Similarly, in the books of accounts, if suppose I am teaching to my wife and I am charging tuition fees from my wife. For Saraf Academy, there is a tuition fees income. But who is Vidisha Saraf? भाई घर का ही तो है. It is not a question of parent subsidiary. It's a question of anybody who is related with the organization. And if there is any transaction between the organization and that authority, which is related, then in that case, there is a subjectivity involved about the outcome, about the financial position, balance sheet, asset liability, about their income, about their disclosure. The question arises in our mind, in our brain, in our heart. We are not saying that the organization should not be involving any transaction with relatives. They can, they should. If the relative is able to perform better, why not? But then transaction with relative are always seen with subjectivity by users of the financial statement. So the accounting body, as per IS 24, has said that whether the transaction is at arm's length, is at proper value or not, doesn't matter. you have to disclose whatever you did with relative in the notes to accounts. The name of the relative, the nature of relationship with them, the transaction value, the amount is still outstanding, payable, receivable, any bad debt or provision made on that need to be disclosed in the notes to accounts. No concern whether you have done the transaction at a proper value or not. So who is a relative? In a company, the key managerial personnel, the executive, non-executive directors, the directors' relatives, the director's relative, and in a company, if there is a subsidiary, if there is an associate or subsidiary ka relative, are all your relative. Because a company is an artificial person. So maybe it's a key managerial personnel, or maybe it's a company, subsidiary, branch, or maybe it's a, you can say, associate, or unse related jo bhi hai, wo sab aapke relative hai. So here, one of the director of E owns whole of the share capital of a company Blue. And the director of the company is a key managerial personnel. The director of E Limited is a key managerial personnel. That director is having all the shares of a company Blue. So when the director is a key managerial personnel, the director is a relative of E, then the director is having 100% shares of Blue, and there is any transaction between Blue and E, that Blue is a relative of E company, because through the director, the related party is there. Whether the transaction at arm's length at a proper value or not doesn't matter. But this transaction is with a related party. So the users want that. The users cannot evaluate the financials if this is not explained properly. In the notes to accounts, whatever the transaction happened, what is the value of the transaction, then what is the amount due, payable, receivable, the relationship with the relative need to be explained. So that those who want to ignore this, those who want to analyze the financials ignoring this, don't want to consider it at a proper value, they can do that now. Otherwise, we will not be able to take decisions as a creditor, as a financials, as anybody. We will not be able to decide what we want to decide about our decision. So for that reason, disclosures relating to relatives, if they are, need to be there. Whether it is at arm's length or at a independent level or not doesn't matter. So this transaction is a related party transaction and need to be disclosed in notes to accounts as per IAS 24. दो ही बात है, रिलेटिव है तो आपको डिस्क्लोजर करना है. रिलेटिव है तो आप उसके लिए परचेज, सेल, लोन, फोन जो भी लिखना लिखिए, कोई प्रॉब्लम नहीं. लेकिन आप उसको डिस्क्लोज करिए नोट्स टू अकाउंट्स में कि ये आपका रिलेटिव है, ऐसा रिलेशन है, इससे आपका इतना का सौदा हुआ था, इतने पैसे मिल गए हैं, इतने बाकी हैं, इतना हमने राइट ऑफ किया है. दैट यू नीड टू डिस्क्लोज इन द नोट्स टू अकाउंट्स so that the users can take informed decisions. They want to include this in the decision making, they want to ignore that in the decision making, they can do that. This does not have any relationship that the transaction with the relative is done at arm's length, at a proper value, no favor given. उससे कोई मतलब नहीं है. That doesn't have any meaning. You have to do the record disclosures of the transactions with the relatives in the proper format as per IAS 24. बस उतना लिखना है. रिलेटिव से रिलेटेड भी क्वेश्चंस बहुत आते हैं, कोई कैलकुलेशन नहीं करना है, बस रिलेटिव है क्यों बताना है और रिलेटिव से रिलेटेड डिस्क्लोजर्स करना है, ये बोलना है और कुछ नहीं करना है. इट्स अ प्रीटी सिंपल टाइप ऑफ क्वेश्चन. यू सॉल्व 1 or 2 क्वेश्चंस, सारा वैसे ही होएगा, सारा वैसे ही लिखना है. जस्ट हाउ दे आर राइटिंग द मॉडल आंसर, मान लीजिए वो लोग कैसे लिखते हैं. Obviously, if you are seeing the model answer, don't focus on exact write-up. Exactly आप 5 करोड़ बार भी नहीं लिख पाएंगे पढ़ने के बाद भी, वैसे मत देखिए. Then तो nobody can pass the exam. That way, looking at any model answer for any subject is very bad, because you cannot write exactly the same language what they are writing. अभी ये जो लिखा है आप चाहे गूगल में सर्च कर लीजिए, IFRS IAS 21 में exactly IFRS का यही लैंग्वेज है, तो ये मेरे को कैसे याद होएगा. तो आप सोचेंगे मैं तो ये नहीं लिखा, नंबर नहीं मिलेगा, तो फिर आप ऐसे सोचते रहिए. Then in that case you can never do your checking. IAS 21, the effects of changes in foreign exchange rate requires goodwill arising on acquisition of foreign operations to be treated as belonging to the foreign operation. It should be translated at closing rate at the end of each reporting date. फिर उन्होंने गुडविल का कैलकुलेशन किया, लेकिन उन्होंने बाई 2 किया है, हम लोग को रॉन्ग हो गया. रॉन्ग हो गया मतलब हम लोग कोई गलती नहीं की है. Why they have not said what is the base currency? दिस इज नॉट अ क्वेश्चन केम इन एग्जाम. आपको एक भी क्वेश्चन में एग्जाम में यूरो टू डॉलर ऐसा नहीं लिखा हुआ है, नहीं लिखा हुआ है. आप यहां तो याद कर लेंगे, when this language is written euro to dollar means $1, but ऐसे थोड़ी ना होता है. The question has to be given properly. 1 unit is what? 1 euro or $1? So our wrong was done because of divide, multiply. At 31st May, the goodwill will be retranslated at the closing rate. The impairment of goodwill will be coming in the PL account. The exchange loss will be recorded in the other comprehensive. Both of these amounts are wholly attributable to the parent company shareholders. We will classify the loan as a financial liability, measure it at amortized cost. IFRS 9 financial instrument states that it would be initially measured at fair value less cost, जो हम लोग बोले. IFRS 13 fair value defines fair value, price paid or received in the market from independent buyer. Fair value will often be equal to the amount of consideration paid or received. However, this loan has been made on interest-free basis, whereas market rate of interest is 6. This means that transaction is not one between the normal participant. Fair value of the loan will be the present value. In accordance with IS 21, B will record this liability in its financial statement. 17.8 million. It has received cash of 20. ये सब क्या लिख रहे हैं ये लोग? और ठीक है, this I have not said. Marks will be deducted because I was just explaining in dollars, but the subsidiary in euro. So वो लोग तो डॉलर को यूरो बोलकर लिखेंगे ना. So 8.9 into 2, then it is 10 into 2, 20. So balance 2.2 million euro they will be recording gain. Interest charge on this, then it is converted. मैंने ये conversion के बारे में बोला नहीं, मार्क्स कट जाएगा. Even though the explanation is given, but since it is a subsidiary which is in other currency, so they will record everything in euro. The closing liability is monetary and so translate it at the reporting date. As such, the loan will be carrying amount. मैंने ये सब बोला नहीं, मार्क्स कटेगा. Because the opening liability, then the interest, then the closing liability. So balance foreign exchange gain or loss. It is a monetary transaction. It is not a question of SBR. It is IFRS also. Because foreign currency transactions are there in IFRS exam also. It is, this question is not relating to consolidation. It is in standalone financial of the subsidiary. तो हम लोग को ये बोलना था कि ये फॉरेन करेंसी में लोन है, हम लोग का फंक्शनल करेंसी यूरो है, हम डॉलर में लोन ले रहे हैं, तो लास्ट ईयर एंड में उसको फॉरेन करेंसी कन्वर्ट करना पड़ेगा, लॉस गेन आएगा. मैंने बोला नहीं, मेरा भी मार्क्स कटेगा, पूरा नहीं मिलेगा. Then the third one, E should stop consolidating line by line from the date the loss of control create a profit or loss. The retained interest would be recorded at fair value. Further investigation required into whether holding is treated as associate. IS 28 decision making, but not. It normally assumed that significant influence exists. However, the agreement and the alien is no longer represented, a board able to participate, so significant influence not there. An entity classifies an investment held for sale or discontinued operation when the asset must be available for immediate sale in the present condition. The sale is marketed, it is marketed at the market price. The sale must be completed within 1 year. The action required to complete the sale is done. Management is committed to sale. Algin has, to meet all of the 5 could be argued that because that is not given in the question, the issue of dilution is not addressed by IFRS. IFRS 5 में कंट्रोल कम होने से उसको हम लोगों को एज अवेलेबल फॉर सेल मानना है, बोलता IFRS में लिखा ही नहीं है. When the control is lost, whether it should be classified as held for sale not written in IFRS. So we need to apply our judgment. So they are saying that on the basis of judgment, the management and all that are correct. जजमेंट के बेसिस पे सही है, उतना हम लोग नहीं लिख सकते हैं, बट बेसिक बात हमने कवर किया. Related party transaction from part of the normal business. Companies operate their business through complex group structure and acquire interest in the other entities for commercial and investment purpose. Control or significant influence is in wide range. These relationships affect the financial position. It is possible that even where no transaction occur between related parties, the operating results and financial position disclosure, even though there is no transaction, still you need to name the relatives. Still you need to mention about the relationship with any relative. The assumption in the financial statement is that transactions are carried out at arm's length. Maybe the assumption are there, still the related disclosures need to be made. The conceptual framework says that containing must be neutral and free from bias. You can say that like yesterday. Just 5 minutes, then we are taking some break. मैंने जो बच्चे क्लास में मैं पढ़ाता हूं 10, 11, 12 में, जिन लोग की क्लासेस मंडे वेडनेसडे होती है, उसमें मैं उन लोगों को ये कॉन्सेप्चुअल फ्रेमवर्क के बारे में डेफिनेशन देता हूं. एसेट्स, लाइबिलिटी, इक्विटी, कैपिटल, इनकम, एक्सपेंस, then the qualitative characteristics of financial statement, relevance which is related with materiality, and faithful representation. So agar if there is a transaction with the relative and maybe it is at fair value or not, but if it is not disclosed that it is with a relative, the faithful representation is not done. You are violating the conceptual framework, fundamental qualitative characteristics, faithful representation. So that should not be done. And there are enhanceability if you want to compare one of the financial with others, if you want to verify some transactions whether they are at proper level, then in that case transaction with relatives need to be disclosed separately. So that they are explaining also here that it is because of the conceptual framework also, maybe you forget IS 24 is there or not, then also transaction with relative need to be disclosed. And then they are saying the director is a key management personnel. The director is related with the other company owner, so that is a relative. So any transaction with the other company as purchase or any goods or services should be recorded. The outstanding balance, dues, any write-off or anything should be disclosed in the notes to accounts that they have written. When you go in the marking guidelines, ऐसे ही एक बार बात करते हैं, यहां पर ब्रेकअप नहीं लिखा हुआ है, but ये related party 1 mark per point. Here it is not written which point. But when I have given you question paper for testing and when the exam, it is given to examiner 8 number कौन से 8 point पे, which are the points. हर एक point के ऊपर एक एक point पे किस पे 8 number मिलेगा. Just for example, when I have taken the test, the progress test, जब मैं आपका चेकिंग, देखिए एक एक नंबर लिखा हुआ है किस पे नंबर मिलेगा. ये एक एक नंबर मिला के मोर देन द विच इज अलाउड इन द एग्जाम. दे हैव रिटन सपोज 15 पॉइंट्स 15 मार्क्स. द क्वेश्चन इज ओनली ऑफ 8 मार्क्स. आपको इन 15 में से कोई भी एक पॉइंट लिखना है. कहीं कहीं पर ऐसा भी होता है कि यू आर राइटिंग सम पॉइंट्स विच आर नॉट इन द मॉडल आंसर बट विच आर रेलेवेंट बिकॉज यू आर राइटिंग प्रॉपरली. सो सम सब्जेक्टिविटी इन्वॉल्व्ड बाय द एग्जामिनर गिविंग यू मार्क्स, मे बी 2-3 नंबर ज्यादा या कम. If you are getting 55, you may be getting 56, 57, 58. You may be getting 54, 55. But 55 मतलब 45 और 65 नहीं मिलेगा. थोड़ा सा एग्जामिनर को 1-2 नंबर का लीवे देना होगा. But when the examiner are giving you marks, they are exactly reading किस पे नंबर मिलेगा. आपने वो कवर किया नंबर है. Not that language. But आपने पॉइंट्स को अपने लैंग्वेज में लिखा है, marks will be given. This is not that I can give you marking on the basis of this. ये मेरा थोड़ा subjectivity ज्यादा हो जाएगा. Because here the breakup of 8 is not given. So if I will give in the test this question, then proper marking I will not be able to do. तो आप अगर कोई पेपर सॉल्व कर रहे हो उसमें ऐसे 8 मार्क्स है, आप अपने आप को मार्किंग नहीं कर सकते. लेकिन अगर उसमें मार्किंग ऐसे है, whatever I closed, that is 1 mark, 1 mark, 1 mark like this, then you can do marking properly. आप यहां पर मार्किंग प्रॉपरली कर सकते हैं. आपको नंबर मिले, क्रिटिकल होना पड़ेगा. जब मैं आपको मार्किंग दूंगा आपका चेक करके, आप वैसे ही अपने आप को मार्किंग करिए. कोई कोई जगह मार्किंग नहीं भी करना है तो भी देखिए वेयर टू इंप्रूव. अकॉर्डिंग टू मी, ग्रुप अकाउंटिंग का अगर कोई एक क्वेश्चन और करना है, वी विल बी डूइंग एट द एंड ऑफ द क्लास एट 8 o'clock, मे बी अ डिस्कशन. But अब ग्रुप अकाउंटिंग के अलावा we will be doing the other areas, maybe revenue recognition, maybe employee benefits, maybe what do you say, provisioning, maybe anything fair valuation, measurement, ethics, ये सब में भी तो जाना होगा, वो भी कवर करने. So अब ग्रुप अकाउंट को इधर एक बार रोक रहे हैं. We will be doing after half an hour, we at 22 minutes, it is 13.08. At 1:30 we are again meeting and we will do the other areas, not the group accounting. बिकॉज नहीं तो केवल ग्रुप अकाउंटिंग ही कर पाएंगे, हमें सारा चीज एक बार मोटा मोटी थोड़ा थोड़ा कवर करना है. सो वी विल बी डूइंग एट 1:30. यस, या इंक्रीज इन एसेट्स और डिक्रीज इन लाइबिलिटी. Other than matlab, if there is increase in assets when the shareholder has paid money. Suppose I have given money in Saraf Academy to purchase the assets. Then that is not income for Saraf Academy. Understand? अगर मान लीजिए गुड सेल करके आपके पास इन्वेंट्री बढ़ा, पैसा बढ़ा, then in that case you can say it is income. But if the owners are giving money, then in that case that is not income. कहां लिखा हुआ है ये? उसको वैसे ही बोलते हैं भाई. Income. Other than those relating to contribution from holders. माने शेयर होल्डर पैसा दे रहे हैं. अगर मैं कंपनी में पैसे दूंगा एज अ शेयर होल्डर तो वो इनकम थोड़ी ना है, वो तो लाइबिलिटी है ना. If suppose you were borrowing from bank and you were purchasing an asset, then increase in asset is not income in that case. We are saying simple definition of conceptual framework, increase in assets or decrease in liability is income. If you are selling goods on credit, then in that case receivable goes up. So you are saying it is an income because sales revenue is an income. So when the increase in assets and decrease in liability happening, generally it is an income. But other than when somebody is contributing, some owners are contributing, or maybe you are borrowing and then increasing the assets. Because accounting equation is assets equals to liability plus capital. Assets are increasing because liability are increasing. It is not income. Assets are increasing because liability is not increasing or equity is not increasing. Then it is an income. अब इक्विटी में शेयर होल्डर रिटेन्ड अर्निंग वगैरह भी है. If assets are increasing because of retained earning increasing, it is an income. Because if you sell goods on credit, then there is a retained earning increase and there is a receivable. So increase in assets is supported by increase in income. जब भी कोई डिफिनेशन पढ़ते, कल भी कोई पूछ रहा था, मेरे को नहीं ध्यान है कि सर यहां तो ऐसा लिखा हुआ है. डिफिनेशन को प्रॉपर एग्जाम्पल दिमाग में लाना होगा, नहीं तो डिफिनेशंस बहुत गड़बड़ लगेंगे. Need to understand this. कि when you are reading any, you can say any law, any taxation, anything, IFRS language, IS language, आप उस लैंग्वेज का एग्जाम्पल ठीक से नहीं बना पाएंगे तो वो डिफिनेशन गड़बड़ लगेगा आपको. तो या तो एग्जाम्पल बनाइए या उस डिफिनेशन को भूल जाइए, नहीं लिखना है हमको. बस यू रिमेंबर इंक्रीज इन एसेट्स और डिक्रीज इन लायबिलिटी इज इनकम, दैट वे. Otherwise, if you don't take proper example, then it is creating problem in your brain continuously, every second. यार ये कैसे होएगा, कैसे? तो या तो मेरे से पूछ लीजिए या अपना एग्जाम्पल अच्छा बनाइए. मैं बोलूंगा ये सब चीजों के लिए सबसे बेस्ट क्या है. इफ आई विल से दैट्स योर, चुपचाप से चैट जीपीटी में जाइए, बिकॉज गूगल से बहुत ऊपर है भाई. चैट जीपीटी में जाके गूगल नहीं बताएगा ये सब, चैट जीपीटी इधर डाल दीजिए. डाला आपने? अदर देन दोज रिलेटिंग टू कंट्रीब्यूशन फ्रॉम होल्डर्स ऑफ इक्विटी आर इनकम. प्लीज एक्सप्लेन दिस टू मी विथ वेरी सिंपल एग्जाम्पल. ठीक है, आपने चैट जीपीटी को बोल दिया, वो आपका टीचर है. अब ये जरूर है गलत बोल सकता है भाई, बिकॉज चैट जीपीटी गूगल से थोड़ा ज्यादा गलत बोलता है. तो वो आपको ध्यान देना होगा कि मेरे को ठीक कैसे करना है. मतलब जो एरिया के बारे में अच्छा ज्ञान है, विच आई एज्यूम सुदप्ता यू हैव गुड गेन, गुड नॉलेज अबाउट इनकम, तो आप ये समझ पाएंगे. लेकिन कोई कोई जगह पर जहां पर आपका गेन ही नहीं है, नॉलेज ही नहीं है, वहां चैट जीपीटी को मत यूज करिए. बट इट इज सेइंग सो मेनी थिंग्स, यू मे बी न्यू रीइटरेशन, इतना नहीं, छोटा लिखो, वो करो बोलते जाना पड़ेगा. तो इन दैट केस इट विल बी वेरी हेल्पफुल, विच इज अ न्यू एआई टूल आई एम रेगुलरली यूजिंग. वेन एवर आई एम अंडर कंफ्यूजन मैं तो खोल के रखता हूं, जैसे गूगल है वैसे ही खुला हुआ है. प्रियंका, एज आई ऑलरेडी सेड कि आफ्टर द क्लास आई विल गिव एवरीथिंग वॉट एवर आई एम शोइंग इन द क्लास टू ऑल ऑफ यू. मेरे को थोड़ी ना अपने पास रखना है यार. बट दिस इज नॉट द क्वेश्चन गोइंग टू कम. either in the exam, either in the study text or in the exam kit, anywhere. What will come in exam will be totally different. The area will be same. Okay? So we are meeting at around 1:30 or 1:35. Obviously, you need to be remembering or you need to go through again. So I will share. I said in the beginning only when you came late. In the beginning only 10 minutes I said this. Don't worry. Okay? So 20 minutes break approximately.